There we are. How we doing?
We good?
Good to see you guys. Good morning. Morning, everyone. How we
How's
going?
everyone doing?
Going strong. Morning, morning, morning. Good Tuesday today. CPI day. We got the zoo data coming out pretty soon as well. So plow through that too. How you doing, James? You been well?
Yeah, not bad. Not bad. I'm in a position at the minute, so just got to manage that. But yeah, not too bad. How you doing? You good?
Yeah, going strong, going strong. I'm sitting on my hands for the time being, sort of waiting for that zoo data to come out. See if we got
Yeah.
some better levels. Possibly looking at shorts on pound and euro dollar, but not quite
Yeah.
there yet. So yeah.
I've been really patient the last couple of weeks. Like for my style, I'm very patient, waiting for clean opportunities, and then when I see them, I've got to take them. And it works differently for everyone. People want to be more involved in the market a lot more. Some people sit on their hands a bit more. For me, I'm a little bit more towards that way where I'll be patient, wait and wait, and then when there's something clean, I'll look to enter.
Yeah, exactly. Yeah, yeah. Morning, everyone. Morning, Mariana, if I can speak properly. Hey, Venetius, how we doing? Henry, Sir James, how we going? Malik, you're new here. Welcome, brother. Welcome, welcome. How we going, guys? How we going? How we doing as well? Going strong. Alrighty. Yeah. So I guess you can show us because you said you're already in a trade, right?
Yeah.
If you wanna, we can go with that first, and then I'll jump over some
Yeah,
stuff
I can break down the
after.
position.
So wrong one. Wait, where are we? Guest. Here we are. There you go. Should be up now.
Yeah, so currently short silver. Again, part of my entry model. All I'm looking for is a 1-to-1 just on this position. The reason for the entry was I was looking for longs up here, but then I see this as sort of a lower low, looking for the lower high. We've got the bearish engulfing in the doji, and obviously I'm more of a technical trader. So my
Mm-hmm.
prediction for today is to look for shorts. And then I have my entry criteria, which is break and retest of 1 hour 50, 0.382 rejection or zero point 0.5, one of the fibs. And then once we get the breakdown on the pivot, which we've got, my entry was just around here, literally a couple half an hour ago, around about that. So yeah, we're currently live in this position. Again, not really much I can do. Stops in place, risk is managed, so it's either going to hit target or it'll stop me out. So this is the thing. There's not really much you can do once everything's ticked off.
Yeah.
You just have to sit and be patient and just wait and see what happens. Whether it's close to my target and it reverses, there's nothing I can do. So yeah, that's currently the position silver. There was a few others on watch that I had, but yeah, this is the main one that I'm in at the minute.
Fair. So yeah, silver. Do you trade a lot of silver? Because I hate silver these days, man. I always
Yeah,
go to gold. Silver, I find it terrible.
it's more, I'll scan through all these currency pairs, silver, gold, everything. And then if there's something that's clean that suits my style, I'll look to enter. So I'm
Mm.
not too worried about the pair or the asset. It's more if there's an
Just
entry
the
based on
structure.
my system, I'll execute it if it looks good.
Fair.
So yeah, we'll
How you
see
doing,
how this.
Chantel? Hey, Manish. How we going? Good to see you guys. Good to see you. Yeah, It's interesting because I'm looking for potential longs on gold for today, so a bit of a recovery. So whether silver's obviously got very different structure at the minute, um,
Yeah,
but yeah, see how that plays through as well. Because we've been a bit beat up, definitely as far as gold goes, the past
yeah,
since Monday opening and last Friday.
yeah.
But
Just
see where
targeting
we
the
are.
lows as well. So even if we get down to here and then we reverse, just a quick move to the lows. That's all I'm looking for. But again, there's nothing certain that it's going to play out. It's moving okay at the minute. But
Hmm.
that's the thing with trading, that nothing's guaranteed. If you execute your plan and execute the process, the outcome will take care of itself long term if you have a profitable edge. But this individual trade could lose, and there's nothing I can do. I'm not upset about it. It's a
Yeah,
good trade for my style, and once I manage my risk, there's nothing really I can do.
yeah, precisely. Anything else on the radar outside of silver that you got an eye on today? Then, as
I
far
did
as
have,
structure setups, that kind of stuff.
yeah, New Zealand dollar, US dollar sort of gone off without me because this happened at like 4 in the morning, and I don't really trade Asia.
Mm.
But again, you can see it's exactly the similar type of style, that an entry that the silver trade was. We pulled back to the 0.382, we rejected. This is a trend continuation move on the daily. I see this as a lower low, rejecting the 50 EMA, and then looking for the quick continuation down. So this is a valid entry if I was awake, but I don't trade that time. Again, rejection of the pivot, breakdown. And then there was a couple, these didn't really pull back far enough to the 4 hour 50 or the 1 hour 50. But again, you can see the continuation looking to occur. And then US dollar, Japanese yen, I was just waiting for the pullback, but we haven't got that yet. It looks to be going off without us. So the one that did give us the entry was silver. So that's why I entered that. But they were the main things on watch, but I think they're pretty much gone now.
Yeah, fair. Yeah, dollar yen's definitely running on hard the past 2 days. I still want to see Dixie come a bit further. That said, I want to see euro come a bit higher first before we actually complete the move.
Yeah.
So, but yeah, like you said, dollar yen's already running on. I was looking for a bit of a deeper pullback as well before we.
Yeah, I would have liked to pull back a little bit further down for my entry criteria, which is the pivot, the 1 hour 50, 0.382 and 4 hour 50 EMA. That's where I deem value. And then if I got some kind of bullish momentum at that point, it would go alongside the daily time frame. So I was waiting during Asia for it to pull back. That's what a lot of the time happens. And then in London, we'll get the rejection and then I'll look to enter like I got on silver, but we never got that. So
yeah, no, not at all, unfortunately. Because where's my chart? I'll bring that up. Similar deal. I was looking for a bit of a move back, at least to between that 148 and 147.90, somewhere around there, to then get long. But we just kept stalling on coming into early London. So we'll see how that plays out through there. We go to the Dixie right here. We do have this. Let's clean this chart up a bit. It's a bit messy. Got rid of the fib there. So similar deal. I was looking for a bit more of a pullback on the Dixie as well. Before we sort of take another run higher, we might still get that because we are gradually creating lower highs through here. And then that would have meant on the euro as well, looking for a move sort of up here into that 116.35 before shorting for today. Just as a cleaner entry point. I don't like the shorts from here. I can see a bit of further downside into that 115.80 kind of area for today. But I think we've got to clear the zoo data in 15 minutes and then start looking towards CPI later today. So, yeah, bit of pre-positioning there. Gold as well, we had that further run-up, which then has just died since. So coming into earlier London, want to see if we can establish another foothold here and then get another run higher up towards 33.62. That's about the pivot today for gold. And then you got this higher sort of box of liquidity up here, about 33.70. So we'll see what goes on there. But yeah, at the minute, I think across the board, we are somewhat waiting for that CPI to clear through for direction, because that's going to be probably the biggest piece on the cards today.
Yeah,
as far as things go. So
yeah, because you're obviously more fundamentals, so I take into consider fundamentals, but I'm nowhere near as knowledgeable probably as you on fundamentals. I look more at the actual price action, and I need maybe something I should look into a little bit more, but I sort of see it as volatility. It'll either stop me out quicker or hit my target quicker. Maybe if I can build a position based on fundamentals, it might actually improve. But yeah, it'd be interesting to see whether it'd be nice if silver does sell off. But we'll see.
Yeah, definitely. I mean, yeah, silver. I just hate, like, as well as far as the technicals on silver, I always find it just so sort of full of chop these days. Used to be much cleaner when it sort of just play lagging to gold, and you could often find the move on gold, then that'll play out with a slight delay on silver, and it was a perfect just rinse one into the other.
Yeah.
But these days, they've disconnected a lot. So yeah, I've moved away from trading silver so much these days, but I can definitely see the shorts on silver right now coming through. So
yeah, I'll just look more at the setup itself. So if there's a clean setup on whatever asset, then I'll look for an entry. I mean, it isn't like an A+ setup. It's good enough, very valid for my system. But obviously the risk is that this continues in the upward trend. I'm betting on this being I'm betting on it becoming a lower high and then the continuation to the downside. But there's a high chance that even though there's a bearish engulfing, that price could just continue in the bullish trend that it's been in. So that's the risk, but everything else looked okay.
Yeah, for sure. Henry's in Aussie dollar short. Hey, Henry. I do think we got more downside for Aussie dollar after the RBA today, for sure. We sort of had that, we had the drop, obviously, through here during Asia. Bit of a climb back up to the opening point from the RBA announcement, and then we've just fallen off again. We've now cracked a new low below that 65, and then the 64.95 area that we dipped to earlier towards the end of Asia. We're running on down towards the next support point there. So yeah, definitely decent trade there, Henry. I'm curious where you got in though, man, and where you're looking to target for the Aussie at the minute. As far as if we go back over to the euro, the thing with the euro, this is looking pretty weak as well from a technical standpoint. Like, we're just struggling to get up, struggling to get any kind of air at all after yesterday's fall. Caught that pretty nicely. And yeah, I'd prefer to short for some higher levels just for a bit of coverage as far as the entry position. But I don't know if we're getting it. If we break these lows, 116.08, I might just jump into the trade. Because yeah, really lacking as far as the euros today, which is a bit surprising. But see how we go.
How do you use personally your pivots? Do you use it in a certain way? Because obviously I can see you've got pivots on, I've got pivots on. I'm not sure if we use them in a similar way.
So pivots for me, often I'll just sort of, I kind of look at them as like a sort of expectancy of the ATR for the day. So I'll often just play them sort of point to point, depending where we come in, the surrounding. So say we got dollar yen here, right? We're obviously approaching the R1 up here. So I'd consider potential shorts from this kind of area generally. But then I'll also go and check the cross sort of correlating assets, see if that also lines up with, say, euro dollar, pound dollar, the general dollar move as a complex as a whole, before actually jumping into that. So right now you can see euro dollar just on the trot, coming off still. So I wouldn't necessarily be looking to short dollar yen from here, because it does appear we might just be running right through this level. And stop drawing. And then go for the higher areas at that 148.80 and pretty much just play them level to level, and just sort of mean reversion throughout the day once we've completed that kind of ATR move. So that's kind of generally how I use them, if that makes sense.
Yeah, I'll use them in line with the fib. So if price is below and pulling up to that level and we get some bullish or bearish rejections at that level and we get a breakdown, I deem obviously if it's below the pivot, there's more bearish momentum, which adds that confluence to all the other confluences. But I wouldn't I don't use it singly, just like the pivot, sell or buy for above or below.
Yeah.
In alignment. But I like them. I think it adds to the tools of what I need to be consistent.
Yeah, exactly. I mean, I've got like several trading platforms that I've always got running, all at the same time, because I do a combination of, sort of some scalpy stuff, some more technical session to session trades, and then I've also got some of the fundamental macro stuff in the background as well, and taking some swing trades and that kind of thing. So I've got a full suite of sort of different strategies under various accounts that I'm running.
Yeah.
I've been trading for like 13 years now, right? So
you've been a long time.
You sort of run through every type of structure and approach and build up sort of a couple of little bits and pieces here and there.
Yeah.
And then just generally scan markets, kind of like what you were saying, and see just what fits with each of those, and then you'll just jump into it. So yeah, always a few things going on at once. But yeah, they're again just a good way to kind of, space out expectations for the day. Also check, the sort of standard divs, whether that's via Bolly bands or I've got some other indicators for the past, 120 bars, etc., and just look at the general expected moves for today. So yeah. Henry, where'd you get in again? 65.037, target at 64.40. Man, you're running it right down. That's hectic. Let me jump over to Aussie. 64.40. Mate, we're expecting absolute collapse for the Aussie in that measure. I reckon I can see the 64.70 level. I don't know if we'll quite get to 40, at least not today, Henry, but I mean, that's a cleanup and a half if you get that. So Euro's definitely indecisive. We've got the zoo data in 7 minutes now, so hopefully we'll get a better picture once that's flushed out. Pound has sort of ran on a bit. We're now getting to that higher area that I was considering. It's either sells if we stalled out there at 55, in line with the euro coming up though. Euro stalled out, we didn't quite get there. Pound's pushed on further, so there might be an opportunity to sell from here somewhere on the pound. Also got a few higher areas though if we push that prior high. Yeah, pound's hard, man. Pound's hard today. So I'm not confident until Euro's actually found some kind of decisive direction to actually jump in shorts on the pound.
How many trades on average do you think you take a month, roughly? Is it sort of similar, or is the data quite varied?
Yeah, it'll vary widely, because some days I'll take 2 trades in a day. Other days it'll be 12 trades in a day. It sort of depends on the volatility, the setup, how clean things are, what kind of direction we have with data coming out that day, that kind of stuff. And I try line up the forward expectations with whatever major news there is that day, and then the current technical sort of market structure, and sort of roll with that. So yeah, it can vary quite widely.
So you heavily waiting for fundamentals for your entry primarily, so sort of maybe 70% fundamentals, 30% technicals, or how does that work?
Again, that I'd say it's sort of probably more 50-50. It's just knowing, say if I play out, I'll play out a couple of different technical structures, technical ideas, and then just knowing that the data is coming through later. Obviously that can completely shift price, right? We get a terrible zoo number, we collapse through the floor, that's going to negate the higher sort of structures. It comes out a little bit better, we actually get that run, and now you've got the technical structure from higher up that you could then play into. So I normally sort of lean into those things to give a bit of forward direction of risk, whereas I'd rather wait for that to flush out and then enter after that, knowing that if I'm seeing something right now but you got the zoo coming up, you could just get blown out on that. I try and avoid that, just to not take unnecessary trades where you can just get knocked out pretty simply. Otherwise, it's just racking up commission and small losses here and there, and then you got to make it back up again, right?
Yeah. So, that's the cool thing about trading, is the fact there's so many different styles that you can make work. When I first started and got into trading, I was seeking out like the one best strategy. What is this perfect strategy that everyone's using? And at the end of the day, there's so many that people can profit from. That's the cool thing about it. You could be looking at something different to me, and we could have, in the end of that day, both be up. So yeah, it's very interesting when people develop their styles and what's right for them and everything. So
yeah, there's 100 million ways to skin a cat with trading. That's for sure. especially when you get into all sorts of things about, if you're cross-hedging a book with, uncorrelated assets, all that kind of stuff, because that's going to completely shift your total risk exposure, that kind of stuff as well. I think, 3 minutes now? So we're getting close. I'd like to see us pump from here, get that flush, find a decent short, either whether we just make it to the prior tops from Asia about that 116.30, or we actually push on, see where we get to. But, yeah, pound's starting to look pretty ripe, at least for a near-term pullback here somewhere. But I don't think we're there just yet. We're storming on right now. What else are we looking at? Let me jump over to your screen for a sec.
Yeah. So silver's slightly pulling back. We'll see what happens. Obviously, like you say, 2 minutes. We'll see for me how this candle closes. But it's still okay in terms of the breakdown. If we get some kind of lower high here and then get the continuation down to target, that'd be nice. Equally, we could just pump straight through and get stopped out. That's the risk, but my risk is managed. So yeah, just sitting on my hands. Everything's looking okay technically. One of the entries is a break and retest, 1 hour 50 and 4 hour, and in 1 minute this 4 hour candle's closing bearish. So all I'm looking for is for the move to the downside. So if we get this continuation, let's see what's happening on the 15 minute. It's just indecisive in the sense that we could pop up and we'll get stopped, but equally we could go to the downside. So I know my data, just gotta sit on my hands and be patient and wait and see what happens.
That's fair. We got 30 seconds now for the zoo data. Finally get this to flush out, and then hopefully we'll get some actual direction after that. Get some moves coming in. Jump over here again. So yeah, pounds come right up to that R1 just by the prior highs. Let's go over to the euro, see what happens. We have 2 seconds now. 2 seconds. Pretty much in line, really. Nothing crazy. Absolutely no reaction. There we go. Wonderful. Typical.
I guess sometimes that can happen. You're waiting for some relief. I've been there where you've waited and thinking it's going to be extremely volatile, and you're waiting for it to count down. Sometimes it is, and then other times you're sat there thinking, "Oh, okay, nothing happened." So,
yeah, well, I mean, you often have to get sort of a bit of a digestion first, and then just see where moves sort of pull to. So, hopefully, we can now get this move higher, pound as well, running on a little bit. See if we can get that completion, find a top somewhere here. Either we run the prior high, come take another stab at 135, and then that would have the euro also coming up, completing that higher move. That's what I prefer, but
yeah,
definitely a bit slow today. Euro is soggy as real soggy. So
yeah, I'm working on it, Ellis. This trade, if it plays out, we could be getting that. So we're working on it. We got to see.
Nice. You're close then.
Yeah, if this trade hits full target, because that's why I'm only looking for a 1-to-1, that would be passed. So the hardest thing, I'm not sure you're probably funded or have multiple different like capital, but when you're on your last trade for any account, you're sort of controlling the mind of like keep executing.
Yeah.
But also you're well aware that this one trade today could pass me or could set me back, which is okay if it sets me back. That's part of trading. You're not going to win every single position, but you have the finish line in sight. and then you're sat there thinking, okay, just don't make any rash decisions, keep executing the plan. But it's like I sort of describe it as like if you're playing tennis or something, and then you have like your championship point, you can hit those shots all the time, but when it comes to that point means you win, it sort of adds more pressure. But yeah, we'll see. If it stops me out, we'll enter another position whenever they occur, and I know my edge, I know my data, so it should play out over time based on what I've done this year. But when you're that close, sometimes you are obviously just wanting it to play out, really.
Yeah, when you can see the finish line right there and you're just trying to knock it over, get it done. Yeah. Dude, the number of people that, sort of stumble there, because as well, you often try to like just jump in a trade, just get it done. You're like, okay, this just has to come through and we're sorted, but yeah, that's often where you actually need to slow it down and, nail down the right trade, and then just
the way I look at it as well is, let's say I fluked this trade and it like fluked a random position that wasn't part of my plan and I passed and got funded. You've still got to get payouts. So it's like, let's say this trade loses, that's okay, because if I'm taking the exact trades that produce positive expectancy, then when I have the live account, I'm not going to have any poor errors or make any bad habits. Yeah, I could fluke it now, just random buy for 0.7% and pass. But then if I have those habits on the live account, you're probably not going to consistently get payouts, which is what we all want. So yeah, we'll see. If it loses, we'll be back with another setup, and I've gone through drawdown, gone through all cycles, so I'm very much well aware of. I think it's having the possibilities in your head. If you're aware that, okay, I'm happy with this loss, I'm not expecting to be like celebrating, so to speak, because we're going to pass today. If it passes, it passes. If it doesn't, it doesn't. And it could be a month. It could be tomorrow. I don't know.
Yeah. There's always another battle. Like every single day, you got to turn up to the market. Do it again, and that's exactly it. So I always try to think of it. You can't take any individual trade. Too importantly, there's going to be another one tomorrow. And if you think about what you were trading last week, like you probably can't even remember like all the trades you took last week. It's like you ask anyone, name a trade from 3 weeks ago.
They're not going to remember these.
They're not going to be up, right, without going back and looking, right? So it's always important to remember that whatever you're doing right now as well is equally, it's not the end of the world at all. So.
And if you think of how much percent you're up this year, one position or two positions that have lost, it's pulled you back from when you're that close. But like if I was said you're up 20% or 20% for the year, and then you'll have sort of 3 losses in a row now, you're still up 17%. Yeah, you're back down to say 1% profit or 2% profit on the account. But in the grand scheme of things, you're still significantly up, and that's a sequence of drawdown that can occur. Rather than people panic and then make rash decisions because they're like, oh, so close to passing and now I've blown it.
Yeah, exactly. Pound is starting to get interesting. I mean, we're still on the charge. We haven't fully come off yet. The Dixie as well is looking pretty mixed. Like we're quite indecisive right now. I do still want to see that pullback, but I don't know if we'll get it. Euro's just not offering that strength at all. We're soggy as. What else have we got on the cards today? I mean, the NAS is not doing too much just yet either. We did get capped by that top once again through Asia, so I can definitely see a bit more downside through the day. If we can't push on those highs, then I think that's a solid trade for today as well with the NAS. Other portion for today, the options, as you guys know, often look at the 0DT options for the day. So we're at 23537 for today on the NAS. So yeah, we're not far from that just now. So that's a touch lower just down here. So ideally, if we get another, tap closer up to here, possibly at that 200 moving average, I'd probably consider shorts, given we haven't been able to get above those highs from Asia at all today. So, but yeah, what else are you guys trading?
Long GU. Someone said.
Yeah, so Jones, that's what I was talking about yesterday as well. And all of last week we've had, sort of more a flip-flop back both ways between slightly higher relative strength per the pound and then the euro, and then they keep flip-flopping back and forth right now. So they do keep coming back into line periodically, but we've had it's sort of off-centered with the pound data that we've had come out. I might just flip shortly and just go short the euro if we're not actually going to make any further ground. So we might just have on the Dixie this sort of double bottom through here as the support today, and then just continue to the upside without that pullback. So see how we go. I'm not crash hot on it just yet though, particularly with the dollar yen strength that we've had. Gold is starting to pick up a little bit. We're getting this sort of cupping through here. So we'll see if we do get the move higher. That is what I'm looking for on gold today. So we had a mass pullback through last week and then into the Monday. Pretty heavy. So I think it's a fair shout that we do actually get a bit of a drive higher, just a near-term retrace. So we fell out of that channel from last week. So I think a test of the underside is reasonable on the cards.
Would you be looking for the continuation once it's pulled back to that, or are you looking for longs, sort of more long term?
I think that gold's really hard at the minute. I mean, if we go out to the 4 hour, hopefully there's not too much all over here. Might have to get rid of the pivots, make this a bit clearer. Because we sort of flip-flop back and forth a few times now with gold, right? And we've had every reason from like a, fundamental type backdrop when we had the stuff kicking off with Iran and that sort of thing. And we just, came off, right? We haven't been able to establish any kind of firm attack at the highs and beyond that 3440 level. So right now, I think we are in just a bit of a sideways chop, sideways consolidation until we get a decisive lean on either side. But we keep, back and forth. So pretty much just came to, around the spike highs from the NFP to, 2 Fridays back now.
Yeah, I'd agree. I find currently it's pretty much just going sideways. There's not really any clear direction either way. We're not at an extreme high or an extreme low. We're sort of in the middle of the range, so it's harder to trade. Yeah, if
we held that channel that we formed last week, I would have seen that, we are starting to gradually grind higher, but after falling through it on Monday so aggressively, not liking it as much. That was in part due to Trump was considering tariffs on some on gold as well, which he decided not to put through. So that was what sort of stimulated that further fall.
Yeah.
But think we're a bit overdone near term. Pretty snoozy in the market though overall. I was expecting Zoo to clear and hoping we'd actually get a bit more activity, but we're moving in like 2-3 point ranges at the moment on the Euro, say, on each of these 15-minute bars. So it's a bit slow for sure.
How have you found the conditions this year? Because I've heard a lot of people say they've been quite tricky with everything. But obviously that's depending on style and how people trade. So for me, it's been very, very slow, but that's just my style. But for you, how have you found it?
I think it's been good. Good activity. I like some volatility, right? I mean, you live or die by volatility as a trader, right? So I found it quite good. There has been some, days or weeks at some periods that have been more difficult. Obviously, you got, headlines coming out left, right, and center. Trump decides to just wake up and choose violence that day, right? And it just tears everything apart.
Yeah.
But I think overall it's been good. It's meant we've been able to carve out pretty decent levels of support resistance the whole way through, and just being able to play it point to point to point, which has been really good. I've personally enjoyed it myself, but I've been through a few market periods of chaos now over the years, so you sort of get a handle on it, right?
You get used to the different cycles of everything that's slower periods, more aggressive periods, different world events that are occurring during that time. If you've got that experience, you've traded through a lot of that, it's going to be beneficial.
So Jones, bro, did you got whacked on it? Let me jump over to the NAS again real quick. Yeah, it's looking for the shorts through here earlier, like we were talking in ABL, but it looked as though we might actually pump through there. So I can definitely see why he took a long through there. Hence, I'd prefer to wait for some kind of move higher on the NAS, get a bit of exhaustion on that, and then pull back. Overall, we've definitely still got a good bit of buying pressure on any of the dips, right? Constantly there's a willingness to jump into the market. So that said, we have slowed down that high momentum a little bit. We are getting a little tired, it appears. Obviously, we're in European summer, that kind of stuff. So you always get that slight dip in volumes and liquidity. But you might have a chance for another long somewhere through here if we can actually establish a foothold here, and maybe then go long. So Jones. But we can check the DAX, Maya, for sure. DAX is fairly similar to the NAS and the US indices overall. The German or European markets have been leading the US markets earlier in the year, and now they've sort of flipped the other way, and the US markets are now front running the European markets. So I'd say similar structure. I mean, you got pretty clear levels to lean on here. You see a break, got clear downside. That, or you could try the one for the higher move. But right now, this is looking pretty weak as well. I'm looking for shorts on the NAS overall also. So I wouldn't be too crash hot at the minute with longs on the DAX either. So there's a bit of pre-positioning for the CPI later from the US, which is expected to come in a bit higher. And I would sort of echo that sentiment. We've seen a number of the prices paid indexes coming out from the PMIs and that kind of stuff, showing higher prices paid. And possibly we're finally seeing inflation actually come through as far as the tariff input. So we'll see if that sticks.
Someone said, what's your look on pound CAD? Shall I break that down?
Yeah, sure, go for it. Jump over. Go.
Yeah, for me, obviously ranging is not really too much for me personally at the minute. I would be looking for something that's been going either up for a prolonged period of time, back up at an extreme. So these highs or these highs, that's where I'd be looking for some kind of movement, obviously towards the downside. Could have caught some longs at the bottom here, but at the minute it's too far into the run for me. Obviously everyone's different, but for me to execute. So I would be looking for price to come up to sort of these highs again. And then at this point, once we've moved up to these highs, look for some kind of breakdown trend change on the 1 hour and then looking for the quick continuation. But there's no clear trend on the daily. We're just ranging sideways. So yeah, obviously everyone trades differently, but that's what I would be looking for. Some kind of movement back up to these highs, some kind of rejection, looking for quick shorts, playing the range.
Indeed. Yeah, I reckon, pound's been on a tear, right? So I think at some point we are due that sort of a pause. The pound in general. I think pound yen we were looking at a bit last week as well. Let me bring up pound yen. My charts. I'd be curious what you're kind of pound yen, given that too.
Pound yen.
We've just sort of tapped into that 200. Sort of made that equal top, right?
So this will be looking good for me for shorts as soon as we get. If we get the continuation higher, we would have multiple days to the upside, which for me is one of the strategies, an overextended movement. Once we've got some kind of deceleration, let's say up around here, I would be looking for a quick short back down, and then I could look for the trend continuation moves. But like you say, we are extremely high. So yeah, I'd be looking for some kind of break above this high, continuation to the upside, some kind of deceleration, and again, waiting for these lower time frames to shift. Obviously, we're just trending. So if we get up to here and then we get the breakdown retest, that's where I'd be looking for quick shorts at areas of value. And because we've broken that high, I'd be looking for the continuation to the downside. But yeah, we're trending. So we'll see. That's the risk. But yeah, it's interesting.
Yeah, it's been absolute rip for pound yen. I feel like, at some point we're due a bit of a pullback. Obviously, at the moment, like especially from higher time frames, it looks just like unstoppable, just on a tear. But
yeah, once we get that deceleration and maybe some bearish momentum coming in, we might even get it at these highs.
Yeah, exactly. Because this is where we called the lows for pound yen the other week. And that was our first sort of target point, and we've just built on from there. So that was an absolute ripper trade through there. But yeah, I mean, I feel like you'd have to call us a little bit extended near term, at least for a bit of exhaustion, bit of a pullback through here.
Yeah.
Pound dollar. We might have seen the tops through here, possibly, because it's starting to pull back a good bit. Euro dollar just can't get up. This might be the area to short. I reckon if we get a convincing break of this 116.08, then yeah, I'm just jumping in short from here. So we're just not getting any kind of movement higher. Henry. Tribute to the spaghetti shots. Yeah, that's good. I got what was it that we had Bart Simpson on? I forget what pair it was. I can't remember. We got this running joke in here, James, that basically I'm Picasso because I just draw all over, charts everywhere constantly. So
Different lines and
yeah. What's the CMC one? There we go. So
yeah. Wow. I mean, if it works, it works.
yeah, it's just marking everything out. It's more normally like like I just use the brush tool all the time, marking out levels and stuff. So I'm just like freehand them all, But yeah, so it's become this running joke, good old Picasso. But yeah. Cherry asking about Euro Pound. Go over to Euro Pound. Interesting. I'd be curious what you reckon of Euro Pound, James.
Let me have a look. Yeah. It's obviously we're selling off, but it's where we're going to get this bullish momentum initially or some kind of deceleration. It's sort of very strange price action because you'd expect if it was going to continue in a clean price action, we've sort of double topped, come down. I wouldn't be surprised. We could obviously for me, would get a bounce from this level and just get the continuation higher, or we'll just sell straight through, continue with this bearish momentum, and then that would be that point. This trend would have changed, and then, it's very, very, very unique because of the way I see this sort of a double top. So potentially looking for the lower low. If this continued to sell off, we were overextended for multiple days, I'd look for some kind of buy back up and then look for the continuation back down. But equally, we could just get buying momentum from this level and continue higher. So time will tell. We've got to see what happens, see what price tells us. But yeah, we're selling. If we look on this was an entry that I was looking to take, but again, we didn't get a pullback to my area, 0.382. So it would have been a nice position, but we never got a pullback. So yeah, it's interesting. Just got to wait and see. For me, there's not really any trading opportunities on this until we get the breakdown or we get some kind of bullish momentum at this level to give us a clearer direction.
Similar deal. Yeah, I'd be seeing similar deal. And then obviously in the background, we've had that outsized pound strength recently. So there may be, just like you were saying, from this area, a bit of a rebound, and then I'd look for a continuation of breaking down from there. That or else that fall through the floor here and then find a rebound after that. Because at some point the sort of pound momentum will have to give out for a bit and
on the weekly as well.
Euro strength.
Yeah, on the weekly we're looking pretty bearish as well in terms of short term. I mean, selling off from these highs last couple of weeks, we've had sort of this bearish engulfing and now the continuation on this week. So yeah, I wouldn't be surprised if this is likely to see the monthly. Yeah, so I wouldn't be surprised if this does continue. But it's at what point where will we go to? Will we go to here? That's time will tell. But yeah, it's looking very, very bearish.
Yeah, it was in US dollar CAD, wasn't it, Akram? Let me jump over to dollar CAD. Let's go, oops, we don't want that. Go to the daily. Where is he? Oh, here he is. All right, we gotta zoom in a bit. 1 hour might be better. There he is. This is the Eat My Shorts Bart Simpson. We drew, and he's all distorted because we drew it on the high time frame. But yeah, classic. Good days, good days. I think the sells on euro dollar might be in now. Because we're just not getting any legs higher. So I think we're coming down for that 200-hour moving average now. Just pressing on. So I'm going to look to short through here probably. I think pound's looking about ready as well. Pretty firmly uncapped at that those highs. So euro dollar coming off through here. I mean, we did get a nice touch into the pivot earlier, the neutral point today. So
what's the silver breakdown? Be interested to see. I can show you again.
Yeah.
So for me, last week I was looking for the continuation long, and I was going to look to target this high, but I was also aware that because we've broken these levels that we could potentially form a lower high here. So if we look on the fib retracement, we could potentially get lower high rejecting the 0.618. So I'm aware that this could be the start of the changing trend. So then for me, because we've got the doji deceleration and bearish engulfing, I'm looking for today for a DDP to the downside, daily directional prediction, what's more likely to happen. Again, we could go against this and continue to the upside. That's the risk. But because we've got this bearish engulfing to the downside, I'm looking for a quick move, nothing big, just a quick move, continuation to the downside. Betting on this being a breakdown, lower high. So, and then on the 1 hour, my entry criteria, you can see this was the movement up. This is what I was looking for last week when I was on here. And we never really got a clean entry here. And then now we've broken down, breaking below these lows, lower low. These lower timeframes have shifted. Lower high, I'm betting on this being the lower high, stop above the 618, and then looking just for a quick continuation down here because that would pass my account. But that would usually be the target anyway. So yeah, that's pretty much it. Also 4 hours shifted as well. You can see we're breaking down, retest the 4 hour 50. So I align the 4 hour 50 and the 1 hour 50 together. And then, upon this breakdown, just here on the pivot, I look for the continuation back down to these lows. So it starts with the daily. I'm just betting on this being the lower high end because we've got this nice price action doji candle bearish engulfing. I'm just looking for today to be bearish. So we've spiked up. This could potentially be the high of the day, and then looking for this to continue to the downside. So just a quick move. So we'll see. We pulled back a little bit, but now we seem to be, hopefully if we can reject this and get this continuation, it would be nice. And then we can pass the account, but that will be
passed, all done, mate. That's it.
Yeah, been documenting it on my channel as well for a while on my YouTube. So every loss thing. So it's been ups and downs, but we've
been a journey. Yeah, it's good, man. That's good. Just catching up on chat as well. Where are we? Okay. Good to see you, man. Welcome. Can someone explain correlation between main currency pairs and commodities? So it's going to depend. I mean, primarily you're going to be looking at the dollar, right? Obviously, commodities priced in dollars, right? So when you do get a shift in the dollar, it makes it, dollar runs right up. It makes it a lot more expensive to buy, whether you're looking at iron ore, copper, palladium, that kind of stuff. gold on occasion will have a bit of that influence per the dollar, but certainly lately it's more had its own fundamental factors and general flows from concerns about risk and all the geopolitics and Trump's direction with the economy and the administration at the minute. So but basically you'll be looking at the dollar influence there. Obviously, higher dollar means it's just more expensive to buy the same amount of, however many tons of whatever commodity you're talking about. All right, I'm now in those euro shorts, so we'll see how that plays through. Because euro is just dead, absolutely soggy today. So Saturn here now. That'll be my T1. So yesterday's lows. See how we contend down there about that 94, 95 kind of area, and see if we get the full push down to the S1 today, which is also about where the 200-hour moving average is for today as well. At the minute, we've got Pedro in the background also. Hey brother, how we doing? That's all right. See you, Akram. Catch you later, man. See you again soon.
Cool. Right, I'm going to head off, so I appreciate you having me on anyway.
No worries, man. Thanks, James. Thanks for coming. Let us know how that silver trade plays out. And
you can. If you guys want to check it out on the YouTube channel, type in James Shimwell. It's my YouTube channel. You'll see all the updates on everything that's been going on. So this trade will be on there, whether it wins or loses. So I appreciate you guys, and I'll see you soon.
Good stuff. All right, catch you. Yes. See you later, man.
Thank you, James.
How we doing?
Oh, good, man. What are you looking at? Let me just... Okay, fixed. Okay, perfect. Good morning, everyone. Happy Tuesday. Hope you guys are doing well. LJ, how are you? What are you expecting for today for the CPI?
Going well, man. CPI today... Hey, what's up?
Yeah, go ahead.
No, I was just going to say, CPI today, I am leaning on the side of a slightly higher number. If we start seeing that, some of the inflation related inputs per the tariffs finally coming through. We've seen some of that in the PMIs and that kind of thing, higher input prices. So we'll see if we finally actually see that coming through into the CPI. It will eventually come. Everyone's been waiting for it to actually show up. So possibly this time around, we'll actually get a bit of that showing through. So at the minute, I'm in euro short. I was hoping to get a bit of a higher entry for the shorts today, but euro's just soggy as, right? So we sort of stalled out around that 116.30 level during Asia and just haven't been able to establish any kind of foothold higher. So that's about what I'm looking at the minute. From now rolling into CPI. If
you do have the CPI higher, what you're expecting on the reaction on the market, like between dollar and the US indices?
So definitely dollar strength, right? Because we're pretty much what we're looking at the moment is obviously we got trying to price out whether we'll actually get a September rate cut, yes or no, right?
Yeah.
And that higher inflation might mean we actually knock that right back. We've flipped around, from 97% confidence on September rate cut down to 94, down to 90, back down to 85, then up to 90 again. All last week, we're flipping back and forth. So I think today's really going to be the, one of the decisive factors. CPI is definitely the most important thing on the cards this week. And then obviously if we do get that higher number, then that's going to put doubts in that and probably push us back to December. If we aren't seeing this tariff-related input come through, then we might still push on to that in that September rate cut. So indices-wise, obviously hotter CPI as well is going to be more negative for the indices because we're going to get longer outlook on rate cuts. So it means tighter fiscal and monetary policy situation, which is less beneficial for stocks and indices. So, and just looking at the structure on, say, if we go over to NAS, definitely looks as though we are somewhat leaning to the downside today, just technically as well.
We tested the previous high, like from 2 weeks ago or last week. Like yesterday, we just made a double top, and now we are kind of moving a bit to the downside on us. Are you expecting those tops to hold, or again, of course, it's going to depend on CPI most likely, but are you expecting those tops to hold?
I think so for now. I think we're a bit, maybe a little bit exhausted as far as the perpetual run. This period through the year is often, you always see that sort of slight pullback in indices. We're of course in the European summer kind of period at the moment as well. And I think that's sort of probably the expectation for now. And then we get a bit more of a Santa rally coming towards the end of the year. But yeah, I mean, we've been, running hot for some time on indices. It's just okay, that's way too zoomed out. It's been this perpetual bid, but we can see, the market structure through here is starting to maybe wane, get a little bit more cautious. So yeah, I'd like to see a bit of a deeper pullback, first of all, before we actually run and break highs.
Yeah, that's going to be pretty fun. Either like one of the two scenarios, like actually three scenarios. Either respects the tops now and starts moving down, slightly takes the tops and then kind of crashes again to the downside, or actually takes the tops and it continues to go high. Basically, one of those three. That's going to be the play that we're going to have. And I agree what you said in terms of the CPI. I think if it actually comes up hotter and or higher than expected, I think that's going to be negative for the indices, because again, as you mentioned, that reaction of that we saw, the 80%, 90%, whatever that we have, the probability for the cut rate, how that happened after the NFP, which the day before it was the opposite. It was completely reversed. NFP came out completely terrible, and the odds changed. So now that's going to be an interesting one to see. And again, even that probability of that scenario is just what could happen, because up until the next cut meeting, we are still going to have a new NFP and another CPI in September. So there's going to be still plenty of data to come out, and that's going to be an interesting one. So it's just speculation basically at this point of what's going to happen in September.
Yeah, exactly. Those jobs revisions on the NFP they were horrendous, right? That was absolutely terrible. So yeah, and that was just that week when everyone was flipping to, much, Fed staying on hold for much longer. We got those numbers come out and just completely flipped right back around. So we saw, what was it, like 200 points on Euro? That NFP
it was massive.
We ran up. So yeah, massive flip right there. But all
right.
Yeah, no, definitely seeing a bit of weakness for the indices right now.
Yeah. Perfect.
Let me jump over to your chart.
Yeah, we can. On Euro, it's a bit. Go ahead.
Dip to the bathroom real quick, so I'll come back.
Okay. No problem. Guys, let us know as well in the comments, what are you guys looking at? I saw that Gabriel asked about the pound yen, so we can take a look at pound yen. And yeah, we're definitely going to take a look at that. Barney is saying that yes, Nasdaq is crazy. Yeah, that's the question. Is it going to break or not the all-time highs once again? That's going to be an interesting one. And then Baby Hugo saying, if my thinking can move the market, I'll become. That's a nice one, baby. I don't think we are that powerful yet, okay, where our thoughts can actually move the market. I don't think that's how it works, unfortunately. That would be nice if that will happen. yeah, so if I'm looking at euro dollar, so yes, we did have that massive expansion after the NFP, and last week we finally approached, in my opinion, an interesting level that we could start seeing some selling pressure. Basically, if you guys recall, euro dollar hasn't really done much since last Thursday, since the last time I was in the live stream. I think we were here together analyzing euro dollar, and basically I think even some of you were already potentially looking for longs at around 116. Okay, and that was last Thursday. So basically on Thursday, Friday, and Monday, basically price just was stuck within this range, and basically we were looking a little bit for potential reaction to the upside at around this level, or maybe even a little bit lower. So finally, price came down here. It actually held it quite nicely initially. I'm still curious at around a little bit more into this extreme at around this level. So depending on how price actually is going to react from here, I think this could still lead a little bit into a bullish scenario. Okay, but there you go. This is in a moment where I think again price made a move to the upside. I think this is a valid level to expect some reaction to the downside. We had that reaction. However, I think there's still also the potential that if price comes back closer to this extreme, I wouldn't be surprised. But on the other side, if we follow this structure, this would be maybe a natural level as well. They could find some bullishness or some strength. So yeah, there's not exactly clear space for me at this point. I'll be totally okay if price goes up or down. I'm going to be more in a waiting moment at this point on euro dollar, just to see which direction price actually wants to go next. If something like this was about to happen, basically this, not this one, basically this drawing in here, then maybe there's an opportunity maybe to look for a long. It's something that I'll be paying attention. Depending on how our price may react. I know that some of you yesterday, I think from at least on the Portuguese channel, were trying to find new shorts if price would retrace back into this level, try to look for something like this. Yeah, we'll see. Like it was one of those couple of 3 days on the euro that price didn't really move as much, and maybe it was waiting for the pound to potentially start finding some selling pressure, because there was a complete divergence since Thursday, since the interest rate decision in the UK between the euro and the dollar. Euro was already pushing down, pound was still moving a little bit more to the upside. So yeah, maybe they need a little bit to go back into alignment before there's a clear direction on the next move on the euro, on the dollar, on pound, and so on. Yeah, so Abdullah is saying that as well. EU bearish today. EU is bearish today. I take sell. Okay, from where, Abdullah? Where are you selling, or are you short already? What was your target again, LJ, that you were looking for the euro?
115.80.
115.80. Yeah, it's more or less.
Interim target being back at that 116 again. That's the first, sort of test point.
Yeah, so basically you're following this. Yeah, following this drawing in here that kind of I made to see if kind of goes into where that 115.80, and then we'll see. Yeah, we'll see what will happen on the euro, to be honest. When you're looking at euro index also again had a good reaction to from the top after that big sell-off kind of 2 weeks ago, after the deal between eurozone and the dollar and the America. Then recovered, and now it reacted again. It came all the way back to close to the tops. So again, no surprise that price would find some selling pressure as approaching this top. It did find that selling pressure. I was actually looking to see price would have gone a little bit closer into here. It didn't, and now it's the same thing. Is coming back into this exact same structure. It's quite similar to the euro dollar, euro index. So I'm curious to see how price may react from here. To see if there's going to be a bit more move to the upside, or price will just start moving lower, breaking these levels, and potentially can just move to the downside, maybe back into this level. So yeah, at this point, euro index is basically saying the same as the euro dollar. When looking at dollar index, let's forget about this candle. This is kind of a glitch that happened. For example, on the server, that never happened in there, so let's ignore that. Yeah, it's the same thing. Again, price had a big reaction to downside, got close to this upper edge. We did manage to find some buying pressure in here. Again, I wouldn't be surprised if price still goes a little bit deeper into something in here. So again, If this is not the bottom and price wants to go a little bit lower and find some more buying pressure, I wouldn't be surprised if that happens. And I think we are within these two structures at this point. So I need to see which direction price actually wants to break now. Either up the dollar and potentially start challenging, try to go there again, or if it wants to go a little bit maybe deeper into here, and depending on price moves, maybe we can find some buying pressure on the dollar. Yeah, it's one of those. It's a bit in the middle. It's not really close to anything that I'm interested in trading at this point. So I'll be a bit more on the waiting side. Yeah. Do you have a clear direction of what you are looking for, or do you also kind of like to see a little bit more until you kind of get the direction onto the bigger picture?
Yeah, similar deal. I'm waiting for more cleaner structure overall. At the moment, I am seeing a bit more upside for the dollar. I would have liked to see a bit of a dip earlier through the start of London, but we didn't get that. So we seem to just be pressing on with that dollar strength today. Euro's really soggy. Dollar yen's pressing on. So yeah, I think there's a little bit more height in the DXY before we come off. So similar deal structure you were looking at. So where we are now, I want to see a little bit more height coming up, and then we fall off from there. Get a retest lower, and then just like you were looking at, somewhere in there, find some bit of buying pressure. So that would come in line with euro dollar as well, coming down into this sort of high 115s, and then we find some kind of support, either it's at 115.50 or this higher level at 115.80, and then get another run up at the minute. So yeah, I was looking for that high entry, like I was saying earlier, start of London. But yeah, euro dollar absolute, it's just garbage today. So eventually I balked it and just sold through here. And then pound is kind of topped out as well. We got into this higher box, but I mean the euro is way soggier, so I prefer to sell the euro for today.
Yeah, because again, in terms of the pound, we do have some news. So we had also unemployment today, so we're going to have GDP later on Thursday. So there's going to be some more news in regards to the pound, and you can see a little bit of a divergence that is going on now on the pound and regarding to the euro. Actually, it was a pair that is benefiting from that move is euro pound. Okay, it's been kind of more directional with clear moves since last Thursday. Yeah, I'm curious on the pound. I think price can still go slightly higher. I think yesterday was an interesting initial move to the downside, but I'm expecting still pound to continue to go a little bit higher. I think it made a nice move to basically to fill out this range in here, and now I think it can continue to go a little bit higher, to be honest, instead of just stopping where it is right now. But yeah, we will see what will happen also on the pounds. Again, it's a bit in the middle after we did respect that double bottom in the higher time frame. Yeah, maybe price wants to get a little bit deeper into these levels, 135 or something like that, before looking for a bigger reversal. Yeah, that's going to be an interesting one. Then the question is, would I be interested in trying to buy the pound if price comes down a little bit more? I'm not really sure, to be honest. I don't like the fact that we kind of left this double bottom in alignment in there. I think eventually that can be taken. So I would actually prefer to see pound going a little bit higher before looking for new sales than just waiting for price to go down to look for longs. Longs, I think I'll be just interested below the double bottom. Unless there's some price action clear that starts showing kind of reversal, that'll be a different story. But yeah, I'll prefer to sell it as price goes higher at this point.
Yeah, same deal. I think. I'm not keen on longs on pound unless euro dollar can find a bit of bottom and then make a recovery near term. Then yeah, I'm not crash hot on shorts or longs on the pound right now. Overall.
Yeah, Euro pound was definitely the one that benefited the most since the interest rate decision on Thursday. Like massive move. It came literally all the way back to the top in here, and now it came all the way back again. So that's going to be an interesting one to see if you do manage to break. If you start breaking below these lows, I think starts opening door for price to potentially go even further down at this point. So that's going to be something interesting to follow when you're looking into the higher time frame, with which we have a really strong level of previous support resistance at around these 87s. So it's going to be interesting to see by any chance Euro pound is any interested in kind of coming back into this close to these levels. Or it's going to be just in the range, and we'll see if it's going to come back into this. I was trying to find some kind of opportunity like this. Never happened. Price just kept respecting the previous. They kept respecting the previous high. Never really made any kind of fake out to look for a new short, and eventually got to the target, which is basically this bottom in here. Nice move on the Euro pound. Nice move. I think someone else was asking for our target on Euro dollar. I think we already answered that one, kind of 158, something like that, or 1580.
Yeah, 1580. The first point of call is to actually run through this 116. However, so I've got eyes on that, whether we actually get momentum. And then you've got 115.95. So just by the lows from yesterday at 115.90. Because if we stall out just around there, I look to just close the trade and see if we get a rebound off that point. I think we're a bit slow today coming up to CPI. So
I think Abdul has a kind of a similar entry as well. Kind of, I think he's already short at 165.3, or is about to get short, and I think he's looking for a similar target in there, 115.874. I think it's kind of a similar move in there. The one that you have. So you are kind of on a similar trade. We have let's take a look at pound yen. Just to mention as well that Bonnie is on a short, so you are kind of fighting against them because if you are short on the euro and then someone else is short on Forex Swiss, they're kind of one against the other. So Bonnie, Soros, in what in what time frame are you short, or kind of where is your price, where is your target, just so you can kind of analyze a little bit your trade if you want to. Born in 2019, Jesus, that's a nice time.
I know, it's man's from the future.
Yeah, exactly. Imagine that Soros is still alive on that year. What is your take on the yen pairs and precisely on the pound yen? And like Let's is asking in here.
Pound yen. So we're looking at before. So we've had this massive run up. If I flip over, right. So we're coming up to let me zoom out to. Let's go to 1 hour. It's a bit easier to see. So the other week we're talking about it, caught the bottom through here. This as the interim target point, which we got to. So that kind of area. We had the next tops through here, which we got to, and now we've come up to that extension right by let me zoom out further, these highs up here. Right, so I mean, looking at this, after we've had that kind of charge, kind of feels like we might be due a bit of a near-term pullback, just probably back to about 199. I think overall we are pretty bullish. Still, the pound overall seems as though it's got some more height in it still. It looks as though we're not quite done. God.
Is that pivot points that you have on the chart?
Yeah, pivot points, yeah. They look crazy when you've got, multiple days up there. Yeah. But yeah, because we sort of made this double bottom through there, found support, we've ran back up. We've now got contending with those highs there. You go out to, let's go beyond there, go to a daily. When you go to the daily, it looks as though we do want to break and run this level, but that might be a bit premature after this massive run, multi-day run. I'd say we get a bit of a pullback in here first of all, because that's just been non-stop, right? So whether we're there just yet, not sure. We might get a slight like push through and create sort of a bit of a bull trap and then pull back in into some kind of point of the range. Whether we just get a very minimal pullback, very shallow to about 199, or a bit of a further dip to 198 and then continue running from there. Because a similar deal to pound dollar, you can see a bit more upside, but we've already had such a strong move through here that I prefer to wait for some kind of pullback first of all.
And Gabriel was asking if you think that he can go back to 195 before maybe continue. We talked about pound yen. I think it's basically retest the most recent lows.
What were we saying? 195.
Yes, more than there. I think
I think that'd be probably a bit deep. I'd say as far as you get, like if you chuck a, let's put a fib on here even, right? So I'd see, you got a 50% pullback about 197.50, and I'd say the 38% is pretty fair shot, like 198.15 thereabouts. I don't think we get as deep as 195 again. If we did get that would mean we've got a full reversal. I'd see us like pushing. If we got back down here again from where we are now, I'd probably say we've got further downside from there, right?
Yeah.
So I'd prefer to see some kind of pullback to that 198 kind of area, which is a 38% retracement, and then see if we get another push up. So it'd be something more like this down to here and then run on.
Yeah. And what is your take on in general on the yen pairs? Just then I can share mine as well. Just to understand if you are still looking for strength or weakness on the yen. And just before you said that we have here John Hyder asking for gold analysis and CPI. Guys, first of all, we can read your comments, okay? So we don't need to ask several times because we're going to go to your comments. And secondly, I think it would be even more useful and interesting also if you could share what is also your take, okay? So basically, are you looking for longs? Are you looking for shorts? What price levels are you expecting? What time frame would you like us to analyze? Instead of just asking for a general gold analysis, at least you could go into more detail and be more specific on your request. So if you want to share in more detail, time frame, long, short, price levels that you are looking at, maybe potential targets that would elevate our answer as well. Yeah, exactly the same. He's copying exactly the same question as Joy. I don't know if you guys are the same person or just copy pasting the same comment. But yeah, LJ, what is your take on the and?
So for yen pairs, generally seeing, I'm seeing weakness for the yen pairs, with the exclusion of dollar yen, right? We should rename this the gold live trading room. Yeah,
exactly.
But every day it's gold. Hey.
Yeah.
So yeah, yen pairs overall, I'm seeing further weakness. We had a bit of a pullback in all of the yen crosses. That was when we had central banks sort of shifting rates back down.
I'll get to it.
Gold CPI.
I think all of us should be wearing a shirt or a hat or whatever that says gold analysis or gold now or
yeah, no, we need full gold chain out, right? Yeah,
exactly.
That'd be great.
Sorry. So on the yen pairs, what is your take?
Yeah, what was I saying? Yeah. So as far as the yen pairs, I mean, we've had most of the other central banks outside of the US, right? Everyone's sort of almost come down to their neutral rate now. So on that relative basis, that sort of reset everything. You can expect rates to be pretty stable there. So that means the carry trade per the yen pairs sort of comes back into vogue because you can rely on it being stable. So just like, when we first had that stuff kicking off, you can see, pound yen absolutely cratered off there. If you go look at stuff like AUD yen, we had a similar deal. And we've obviously also got the other bits and pieces as far as the scaries for the tariffs sort of out of the way. So those risk off flows a bit more stable now. So that was this drop through here through April, obviously, and we've rallied back up since. So the exclusion to that would be the dollar yen. I do expect a little bit more height, but then I'd see, we're going to have to tackle this 150 level. It's going to depend if the Fed rate cuts are coming sooner or later. If they're later, then I think we will press on to that 150. And you've got somewhere in this higher 150 to 154, I think we'll get sort of struggle to get beyond there. So as far as the other yen pairs, I see more upside, dollar yen selectively. So I think that's very much at risk depending on the throes of expectations for rate cuts. So yeah. So
basically,
right
I see
now,
some weakness on the yen pairs. On the yen currency, you are still looking some weakness on that, which then kind of will take euro yen, pound yen, and so on to the upside. And the dollar yen may be the one that's going to be maybe ranging a bit more, maybe it's just depending on what the dollar may do.
Yeah, exactly. So another test somewhere up here, that 149.40 kind of area. See what we get with CPI. That's going to be a big mover today. And then obviously, you either get a churn through there or a run right through. But yeah, I've still got the general longer term downside bias for the dollar yen. But near term, it's going to be that, capitulation with the call on the Fed rate cuts. So, but yeah, I've stepped away a little bit from the yen pairs this past couple of weeks because of that shuffle recently.
Okay. I'm actually going to start doubling down on the yen pairs, to be honest, because I'm going to try to use as much as possible the correlation between the assets, and what I mean by that is trying literally to look at the dollar index and the yen index and even euro index to try to find the best opportunity across these three assets. Then can be dollar yen, euro yen, or eventually anything related to dollar as well can play a role. And the way I see it, I think yen index, when you analyze actually the yen index asset, which is basically the asset that I have in here, I think it's quite clear in terms of the structures that it creates, kind of support, resistance, supply, demands, whatever it may be. I think it's quite clean. When it breaks one level, usually it tends just to naturally go to the next one, and kind of vice versa. So it can give you a clear direction of maybe this direction that maybe yen index is going to move on the next day or so, and how can I position myself on the other individual yen pairs? Like again, if last week it was a little bit of a difficult asset to trade dollar yen, for example, because we had yen moving down and we had dollar moving down as well, especially in the beginning of the week, and that's why we had that big range on the dollar yen, and some people actually struggle to trade. Basically, what I mean is to trade this range in here. Like it was quite hard. It was last week, and finally now that we had a little bit more of the dollar moving to the upside, but the yen index still moving to the downside. Then we had finally dollar yen moving upwards. So yeah, basically that's what I'm going to continue to do, and actually double down more on those type of opportunities. So basically we had this correction. So this was kind of this move already this week, and I'm actually curious to see how this yen index may react from here. If you're going to have any kind of bullishness or not. We are approaching once again this kind of lows around 730. So. I'm just going to be curious to see if we actually finally break through completely, because again we came from these tops as well. Like it's like when I'm looking at the extremes, but it's actually respect quite nice for this level. So maybe this actually is going to be the move that eventually is going to break out of this structure and maybe try to challenge back into this whatever 700s or whatever it may be. And this may be just a little bit of a I don't know, just working a little bit of support just before kind of it breaks, and now it becomes a resistance. I mean, price is going to do this. So when that's going to happen, I'm not sure. But usually price tends to respect it at least one time. We do have this move. This was with the NFP last on the 1st of August. So we may have some still demand zone in here that we can find a little bit of a bounce maybe before it goes. So I'm going to maybe expect that. And if it does that happen, then I'm expecting a little bit of a shorting pressure on the euro yen, maybe pound yen or dollar yen. But now, which one of those should we look at, or should be looking at all of them? Yeah, it's going to depend on that. When I'm looking at the pound yen, that was a question. I've been bullish in general on the pound yen. I think on the higher time frame, just as a simple way to analyze it, if you look at this, if you basically look at this range, price went up, price came all the way down to the extreme, then it created again this move to the upside, it broke this slightly structure, it came all the way back to the extreme, and now the natural move it will be actually for price to continue. Okay, price actually respects quite nicely and doesn't break the kind of the extremes. Usually that means that the tendency is for price to go back into the previous extreme where it came from. That's kind of just the way market moves or the price moves. I don't know how long this is going to take. It can take years. In this case, we are looking at daily or weekly time frame, or you can just go there quite quickly. So yes, we did start to break already these tops. I think you kind of looked at that. We already started to slightly break this level. We had that small fake out, price went down, maybe collect new buy orders, and maybe now it's going to be the moment that you finally have that that explosion now to see if price actually starts trading above this level and not coming back in here. In terms of the Gabriel's question, I think that could be, of course, one of the favorite levels for many people to try to go long again if price comes back into this level. Again, just as LJ mentioned, I'm not really sure if price is going to have that deep retracement, and maybe something in between, and maybe that's going to be the level to try to find a new buying opportunity. Actually, to be honest, I would prefer to see, instead of price kind of still just making a small fake out and trying to challenge again to downside, I would actually prefer to see a price actually breaking and holding this level, and after that maybe trying to find a new long to trade to the next level while these levels in here starts being respected, instead of having another deep retracement to try to go long again. So I prefer much more something like this to go long instead of price just doing a small fake out, because if price just keeps faking out this level, you never know if actually price is going to actually just start turning completely. So price already slightly fake out that level. It already tried to go down, even broke this trend line, as you can see. Now maybe this was just a fake out to trap people into start turning into bearish on the pound yen. But maybe now price can go, maybe can even retest now this trend line again, using this level as a long opportunity. Because definitely many people saw this trend line being broken, and maybe even some kind of moving average in here. Maybe they start turning completely bearish, especially after this big aggressive move to the downside. But the reality is that price is recovering again, so I'm going to be curious to see if finally pound yen holds something in here and starts trading higher. That will be more of my take on the pound yen. On the euro yen, I'm still waiting for price to eventually get to the top, and then we'll see if I'm actually interested or not in selling. I'll see.
Agreed.
Victor, welcome.
Hello.
Good morning.
Hello, everyone watching. Thank you, Pedro. As always, you have some sharp analysis right there. I was in the background a couple of minutes already, getting ready to show my mask. LJ, how are you doing, Pedro? How are you both doing today and this morning?
Yeah,
doing well, man.
good.
I saw you. Go ahead.
I was just saying, going strong. Market's a little bit slow today, ahead of CPI, but yeah, going all right.
That's nice to hear. Pedro, you were, I just saw, I didn't know how long you were talking about GJ, but are you in a trade already, or are you considering a trade soon?
No, to be honest, on GJ, I'm not really looking for anything at this point. I did mention that I would maybe like to see price sustaining and staying above this level, this structure that we just potentially are about to break. Mm-hmm. And after that, I would think I'll prefer to look more for a long. But again, of course, it depends on the time frame, because we are talking about 4 hour, day, or something like that. Intraday, maybe you can find something in here that can take advantage. But I think all the analysis that we've been doing is more into a kind of higher time frame perspective. What's the direction that I'm expecting GJ to move towards? So, but to be honest, GJ is not exactly one that I'm going to be paying too much attention. I'm still waiting on the euro yen to see how price may react when it comes back into this top, into these highs. That's maybe the yen pair that I'm mostly focused on, and eventually dollar yen can maybe something pop up in there.
Yeah, that's the reason I ask you this, because on the H4 there's a nice outside bar. Hi Vinicius, how are you doing? Thank you for saying hi. Our good one of those great members we have in our community in the 5ers. The reason that I ask you this, GJ,
Mhm.
if you're in a trade or not, because I see a very beautiful outside bar on the H4, and actually we know that the higher time frame analysis. Maybe I should switch to mine as well, so people have a little bit
Yeah,
of
go
a visual reference to what I'm talking about, right? If we looked on the higher time frames, actually we have been very strong for some time now, and we can understand if you look from the higher, even higher time frames, right, from the monthly that we left an order block, and where are we usually going to go after this happened? We're going to go to the next monthly, right? That's how likely that is likely what is going to happen. It doesn't happen all the time, of course, but that is my idea from the top down. And if we look at lower time frames, we're still strong. We were creating bullish. I didn't mark them yet, but we have 3 4 actually bullish order blocks being created in that same direction from the weekly to that monthly structure we have up ahead of us. And that all of that is telling us, buying pressure continued in the market. And in the daily time frame, we can see that it kind of spooked everyone if you were still holding this price, because it reversed, or at least the reaction it had, that kind of reversal it had on the daily time frame, was right shy of the monthly structure. And so I'm sure a lot of holders would be long holders would have been scared away with this move, only to see it come back very nicely, trumping really all the structures, and coming back all the way to the top again. And so if we see it from the lower time frame, what is it? Monthly, weekly, telling us buyers are in control, has a very sharp reaction, not unlikely for those for those yen pairs, comes back. And what is the next? If I see this, I think this is going to probably want to attempt to break out and continue further. And when I see this down the line, the candle that created and actually closed above the previous swing high, left a very nice outside bar right there. When I see this, I say, well, higher time frame is telling me it's likely to just continue. On the lower time frame, we can expect some kind of a retest of that breakout, and I have a nice structure on the H4 to trade from. And intraday, that is picture perfect for to trade that. That's the way I trade breakouts, right? I'm not getting in before the move, but it's after the close of a relevant time frame comes back to some demand area, as in this case it is a buy setup, a demand area for that continuation. I like that, the setup that you just mentioned, Pedro. That's why I ask if you're already in, or you're still looking
I'm
for.
waiting.
You're waiting.
It's interesting.
Yeah.
That's so standing out to you that you are even starting to look at the yen pairs and other pairs aside from euro dollar and pound dollar. Fantastic. Victor is getting influenced here with this environment. Interesting.
Yes, gold as well. I usually don't trade gold as well, but too often. But just by seeing the setups that you guys are, looking at, I break them down through order blocks and quantities, and I see opportunities as well. The other thing that I didn't mention, because I didn't want to hold to keep speaking too long, but we have a bearish weekly order block, which is against fresh order block that is being currently retested. And I understand that, and normally I would want to look for the short in this case, but because of the higher time frame, because all the arguments I just mentioned, and we are coming from a weekly structure already, and if we understand that this is what the market was trying to do, right, before we created this new one last week, price created the order block as it went to the next structure below. So it to me, it was already absorbed. That selling pressure was already absorbed by this order block that was already there, fresh one as well. And now it just created one, as it likely, what is likely to break a weekly? It's either a weekly or a monthly, right? Something equal or stronger. So with the fact that we just created that weekly last week, tells me, the possibility of, continuing further is something to take into account. That is, it's a great area. Obviously, we can also see for those scalpers or those traders, we can see how the liquidity on that swing high has been taken, and as price comes back, that could have also been a very nice scalp as well for those liquidity traders out there. What do you say, LJ? Are you looking to trade GJ as well, or is it not of your liking?
Not at the minute. I've stepped away from a number of the yen pairs for now.
Okay.
Yeah, until I'd prefer to express sort of dollar moves for myself at the minute. Like after the big run up we've had. So either if we get that break like you guys were looking at before, then I would start to lean into stuff. That or else if we get that pullback. But I don't expect that to sort of play out, say this week or maybe into back end of next week. I think, depending on CPI today, obviously could push dollar yen one way or the other, and then give that corresponding influence. But outside of that, I'm mainly focusing on euro dollar and pound dollar at the minute. I just like the plays there a little bit better. So
nice.
Yeah, I've moved away from the yen pairs for a little. But yeah. I will have to step out now as well. I got to go get my groceries done before the shops close. So I will say goodbye for the time being, and I'll see you guys in about 40 minutes. I'll be back. So
perfect. Happy grocery shopping, LJ, and we'll be keeping the castle. Don't worry. Take your time.
Alrighty. See you guys soon.
Bye.
Thank you, LJ.
All right, so Pedro, how is the chat so far? Are we? Do we have a lot of questions? Out there to be answered?
They're asking for gold for sure, so we need to jump into it. So you can maybe look at it, but maybe you can just touch point on a comment in here from TI channel. It's basically asking again. It's just to share your opinion on what he's asking. Because he's looking for any kind of recommendation, no matter what it is. Just tell me something so I can trade it.
Okay.
What is your opinion on this type of questions?
Why? Well, if it is just to get exposure to as other people are trading, or inspiration for setups, or if it is you're uncertain about the things that you're already doing, if that is the case, then I understand it's fine. However, this should not be like if it's tongue-in-cheek, like give me anything, I understand. It depends on the tone, of course. But if it's a really serious question, you think you are in need and you need suggestions for a trade, I think that's not the right question. The right question, of course, is how do I build a system? How should I become a trader, an actual responsible trader? What are the things that I need to learn? Right? Because you don't want me to give you the fish, you want to learn how to fish. So that's the question. How do I learn to fish? Not give me a fish. How do I learn to get to fish for myself? So, but if it depends on the TY channel. Thank you for the question. We do really appreciate this engagement. That's exactly what we want to. Don't feel it too personal or spotlights on you. I would say I'll be happy to share a setup with you and everyone watching. But keep in mind that whatever we do, even if we share a setup, the overarching idea about it is to give you an example, right? Not exactly for you to act upon that specific setup, but see it as an example, as a suggestion of something you might be looking for in the future, right? As a template, not as a instruction, do this, do that, enter here and put your stop there. That's not what we want to, the type of traders we think, I personally, but we as a organization think we should cultivate as viewers. So let's see if we can suggest something. Perhaps a PY channel. What are you looking at? Maybe if you're still in the chat, let us know what pair you trade, because I want to stay close to what you typically...
Yeah, I think it's on gold. I think we'll talk about gold. And I think it was more of a comment in terms of desperation. Just tell me something. I need help. tell me what to trade. I think that's
Okay.
kind of what I think it was more of that in that sense, at least from the several comments that he posted.
Okay. Well, Y channel, thank you for engaging us. I haven't been able to review all the chats of the last couple of minutes, and this is about 22 minutes ago. Nonetheless, you need to stay simple to begin with, right? And actually, as you grow as a trader, you want to revert back to simplicity as much as possible. Take away things that you don't need, that make things too complex, because simplicity is your friend. What I would say is, for example, and I still don't know if you're looking for something as a swing trader, as a day trade.
I think it's just looking to make money from
Okay.
trading, from the setup that you are about to share.
Yeah.
I think that's more of the urgency that is looking.
I see. Should I comply to that urgency, because it really goes a little bit against what I think I should help you with. If I can help you with anything, it should not be a signal. It seems to be like that's what you want from us. But what I will tell you is this. Let's see. Let's give the man something to work on. All right. So or the lady. I'm not sure. TW doesn't indicate any of the two. So if that is the case, let's look at. I would say, why don't you trade something very, very simple? And let's say you look for alignment, right? Very simple. You look for alignment, so top-down analysis, and you need to have right, a top-down. So you're looking for a direction from the daily, and then you use the H4 for the actual setup, right? Very, very simple, right? With time, you will learn more things you can add or subtract or filter. You make it a little bit nuanced, to make it better. So let's say daily and H4, and you're just going for 1-to-1, for example. One thing you could do, you could go to the daily time frame in this case, and understand, using order blocks, understand this simple idea, right? And I'm seeing that I'm already explaining instead of giving the signal, because that's what I usually do. So imagine the order block is created, and according to, not me, I'm not the inventor of anything, but I mean, according to how I trade, the order block, you can expect some kind of a reaction when price comes back to them, right? Either a little drop or something much more pronounced. Either from the whenever it starts getting into it, it could be squeezing a little bit more, a little bit less, but it doesn't matter. In relation to that order block, you can expect some kind of a drop. So if you can find this idea on the daily time frame, right? So you do this. The first rule is it needs to be in the direction, right, of the D1. Okay, so either while the market is interacting with this order block or after, right? We understand that once it comes back, it has a likelihood to extend somewhat. So it could be as it is getting out of that order block or as it is interacting with it, okay? That's on the daily. That's one criteria. The other one is the same thing. Let me mark this. Same thing, right? But not on the daily. You look for a H4, right? And within the same direction as the daily, you're looking for something similar. Perhaps price has already come from, let's say this is the daily. I'm gonna give it another color, right? So you have the daily, which is this one. Let me change it right here so you have matching colors. Imagine this is happening, and you have prices coming from this area, and at some point it created it, right? Before, let's say price came from before, doesn't matter. I'm gonna, it came back. If only I can get this to work perfectly. All right, so you have this move is this leg, and this part from the daily going out is the second leg. All right, I hope that is explaining it. Obviously, we have on this chart, we have one straight line as the leg, but in reality, as you zoom in, the price never moves in a straight line. It moves in impulse, retrace, impulse, and so on. So what you're looking at either before, as it is coming in, which is a bit more aggressive or a bit more riskier because it hasn't turned yet, or after it is moving away from that daily order block, right? So you're looking for that direction on the H4, and once it creates an order block, you wait for it to come back, and that you take your entry, right? You're using 2 time frames, not too complicated, and you just go for 1-to-1. Where you put your stop, that's up to you. Be my guest. 20, 30, if you want to use exactly a fixed one. Obviously, you need to modify this in the future, optimize it. But this is just a general idea to come up with where you're using the daily as for your direction, and then you go in the H4 after it reacts from, or while it is reacting from that daily for the direction. And if you ask me, where could I find such a move? Let's see if we can find something on the... so basically, I didn't give you the fish. I still give you some ideas on how to fish, right? So very simple. You have an order block here. Price comes back to it on the daily time frame. So now, after the move, it could be before as well, but after the move, you go to the next time frame, and you're looking for bearish structure for price to come back and react to, right? So you have this H4, and you're looking for price to come back, and when it gets there, be my guest with the confirmation. You wait for, you put your stop, and I don't know, you put that wherever you think is in the case of gold, you might be, it has to be something relevant. The size of the stop loss needs to be relevant for the size of the structure that you're trying to catch, right? So you go as price comes back. I don't mean to say you need to put a limit order there. You might, wait for some kind of confirmation, pin bar, engulfing another outside bar on the H4, whatever it is that you like trading already and you have some experience with, and you know that indicates, selling pressure. So, and you get in, and you put it 1-to-1. Try that and come back to us once you have, 50 trades, and we can discuss further how you can improve that simple idea, right? The things that I just gave you, TY, is using top-down analysis, because you're using daily and H4, and you're using the same concept, in this case order blocks, and the idea that price creates these order block and comes back to retest them. It doesn't always predict 100% a reaction. Obviously it doesn't, but that gives you a good framework to work with. And what you do with your stop loss and what you do for your signal, I leave that open for you to fill in based on your current experience. Let us know how that works, and we will gladly continue with the conversation. I hope that is helpful for you. Actually, yes. Let's see the chat if we have anything else.
Yeah, let's take a look at gold properly. Now we have an example in here of which one is it? I was just there.
Want to switch to yours?
Yeah, maybe I can share a bit, maybe my nose, and then you can look at it. But I was looking for a comment from Nelson. What is the comment? Here. So basically, Nelson was looking for a gold entry at 335, or maybe it's already in. Stop loss below the lows, and then take profits. Basically, this trade, I think I just marked it. I think he's looking for a potential long at around this level, or maybe it's already in long and looking for a target to the upside, and basically stop loss just below these lows. Nelson, if you are still there, if you can confirm if that's actually the setup that you are looking for, that would be interesting. So my take on gold, again, gold in these previous weeks, basically, yes, okay, he's saying that is yes, okay. Yeah, that can play out. That can play out. It's just a bit of a risky one, just because VTube price is in range. You don't really know if this is just going to explode to the upside or take the lows first. But he could do. He could, if this like actually holds, he can go higher. Maybe he can even go higher than your initial target. But coming back to the analysis, basically gold has been in the range. In a high range, but it's definitely a range between these 3,260, 67, all the way to 3,440, basically. And that's been like that for a couple of months by now, and you still need a little bit of a direction. Okay, you still need a little bit of a direction. So we can try to trade within these ranges, of course. We maybe can try to trade at this point within this bottom and this top, and we'll see what kind of opportunities we have. So last week we did have that move to the upside, or since 2 weeks ago, since the NFP, beginning of August, sorry, we had that push to the upside, and it was clear that by the end of last week we were losing momentum. Okay, you can literally see this type of compression is literally a move where a lot of sellers started to find price, and the buyers were not really able to push price higher, right? I think that was obvious. The setup actually that I was looking for, it was more like this. Actually, on Monday, I wished for a quick fake out of this structure into a little bit more deeper level into here, and then sell off to fill basically this range that I had marked. Okay, so I wanted to see then price filling out this compression that was created. But I wanted to see this highs being taken first, getting a little bit deeper into this level, and then selling. Basically, that didn't happen, as you can agree. Right? Basically, price just went to the downside and already filled the initial target that I was looking for. It was basically from these lows. All this is compressed, in my opinion, and I think that was a clear expectation that price could eventually fill this range. Yeah, so that was yesterday. Today, I'm curious to see what will happen. Again, my preference is to still trade basically the extremes. What I mean by that is still kind of waiting for price maybe to get closer to this level, or a little bit maybe closer to this demand zone again, and anything in between can be a little bit tricky. I wouldn't ignore totally this level. Maybe in here there's something that this was an important supply that was created with prices which we broke through. So I'm going to be interested to see if there's going to be any kind of reaction from some of these, somewhere around here. But to be honest, I'm not really, this is not exactly the type of levels that I like to trade. So I'll be a bit more into the waiting area on gold. If price by any chance, for example, maybe I don't know exactly when you entered into this trade, but I'll prefer maybe to see at least some break of this structure, and then maybe something like this to get a long entry at around this level, because at this point I see this range and I'm not really sure. At least it's more of guessing that price may break to the upside or to the downside, instead of maybe actually waiting for price to confirm that actually is breaking that level, and then maybe increase the winning percentage or the likelihood of the trade actually to play out by waiting maybe for price to start showing his hand and which direction it wants to go. If it is maybe downside or the upside after breaking one of these two structures in here. So yeah, basically gold is back into the middle. I'm not really sure now which direction it wants to go. My favorite levels would be the extremes, and that will be what I'll be looking for. Yeah, unfortunately on Monday pricing didn't really do what I wanted in order to be able to short it from above. Who's in here? Is it Jonatan?
No, it's LJ.
It's LJ. Move from,
yeah.
Because Peter, if I could take a screenshot, yeah, exactly. I think everyone can see. I think everyone can. Someone take a screenshot exactly of what's going on right now, because literally, the image is in front of your face, like precisely. it's just really, it's like amazing. Okay, what is your take, Peter? What are you looking on gold? Which direction are you expecting? Which levels are you interested in trading? Either more of a 4-hour time frame or maybe just right now intraday.
Yeah, I'm gonna show you. I think the keyword you just said is that gold is in the middle of the range, and that's exactly true in the sense that there are opportunities on both sides. But in the middle, it's the worst kind of area to be looking for, because it's you're not close to your invalidation area for getting a nice stop. All right, let's on gold. Let's do the top down as we all usually do. From the daily, from the monthly, we do have a
Look at that monthly time frame, like which is just weeks.
yes. It's the monthly time frame, and it's been obviously very, very bullish, and it goes several weeks back, and this is the first bearish structure we have had in a long time, and it isn't. It's being retested right now. It is fresh, but it's just one structure. Even though yes, it is monthly, and yes, I expect some kind of a reaction at some point. So there's that monthly possibility, that scenario based on the monthly, that we could have some kind of a push lower. Would make complete sense given all the climb we've had so far with very little, if you call this a retrace, very little retrace. It's more just a consolidation and continuation. So I would see for the coming months, that is, for this possibility to happen, and that could be enough for a great trade. But it needs to confirm on the lower time frames as well. And on the weekly, for example, if we go to the weekly, we're not seeing price slowing down yet. If anything, we're seeing price getting ready to continue to push forward. We have two order blocks, price reacting very nicely to the second one we have got right here, creating another one again. So if you look at from the weekly, it looks like it's getting ready to just push forward, breaking, yes, even breaking the monthly eventually. So maybe the reaction that we could expect monthly is still to come, or it's not going to come, right? We don't know which of the two it will be, but until it actually starts creating weekly structures to support the direction of the monthly, it's very difficult to trade that monthly structure, even though at some point it will have a drop, or it's fair to expect some kind of a drop. So if we zoom in within that bearish structure on the monthly, price, as I mentioned, price is creating bullish structures on the weekly, meaning it's not slowing down. We'll have to see how it closes the current week, because this could be maybe the first bearish structure on the weekly. Then we would have alignment, and we can start looking for possible something on the daily, and maybe even on the H4, and get in for that monthly structure to be traded. However, what I see here is that we did create that bullish structure. We do not have a bearish one yet on the weekly. So that's a sign that we're not ready. And if we go one step closer, yes, we do have a bearish quasi on the daily, which is this, right? We have the, we have this as the quasi reversal pattern that was created as the monthly order block was created. It takes out the neckline, it goes where that daily order block, and has a very beautiful reaction, and that comes very close to the end of the pattern, or the completion of the pattern, goes back and reacts a second time. Beautiful on the daily from that daily structure, right? So it makes a lot of sense. And right now, it's a pity, but that reaction brought us to basically the middle of the range again, right? The range is getting, previously the range was this area, from this point to that point, and now it's getting tighter and tighter. I expect, obviously we don't know, right, that we're gonna have a strong reaction, and it's a little bit difficult which side it's going to be. I would expect, if the weekly really does close as a bearish structure, that's going to be the structure to tell us, let's go back to the weekly. That's going to be the structure. If it does close as a bearish from this moment on, right, that structure, the degree and the fact whether or not is going to respect this, maybe next week, maybe 2-3 weeks in the future, that's going to decide whether which direction we're going to go, right? If it even happens, we don't even know that yet. So that's one thing. We don't have a resolution yet. I mean, we're not gonna get resolution until that happens. But in the meantime, we do have this bullish order block where price is coming back on the daily time frame. It looks like a very nice, and you could expect based on the quasi that this is going to have a continuation. It makes sense on the daily, and it is aligned with the monthly, so it makes sense. But the weekly is giving mixed signals. The weekly is still strong, and depending on how this week close, that could change. But at the moment, that hasn't changed yet. So if you're looking for a short, the short would have been when price came back to that daily order block and shorting it. But that already happened, and right now we're already in the middle of it. Taking that trade as a swing trade doesn't seem to be, this trade is, even if you put it on top of that as a swing trader, that doesn't look the greatest trade to me. So I would I would want to wait for price to give me more indication as a swing trade, because it's not clear to me if we're going to keep on. The weekly tells us we're still strong. We're probably going to break that monthly and continue, but the monthly and the daily are aligned for a move down so far. So maybe the end of this week we will get more information. If we get we zoom in a bit more, I would be interested for looking for the weekly, right? Trading the weekly strength that we've been talking about, and we just got into that weekly. If we go to the daily, we do have on the opposite side also a bullish order block here, and you can see how not problematic, but how tight the area is, and it makes it a little bit difficult because the structures on both sides are intertwined, overlapping, meaning this is the general idea. We have that's not the tool that I was looking for, right? We have the the bullish reversal pattern, which is the break of that, the quasi activating and coming back to an order block, which is this one, and that's basically the idea from where price could be using this daily order block for that breakout that we're seeing from the weekly as well. The succession of weekly structure bullish ones being created for that push. That this makes sense so far, but you have at the same time, and I'm gonna move this away so it doesn't confuse us. But at the same time, you also have a bearish reversal pattern, which also has the monthly. The previous one didn't have the monthly, but it now presumably for that reversal, which aligns with the monthly. So you have mixing signals, and which of the two, and we're right in the middle of that range. So which of the two, and if you put that, basically this is what you have, right? So a bearish structure with a bullish structure intertwined, and we're basically in the same area, right? Both of them have higher time frame reasons for a reversal. One is bigger than the other one, but they're still visible on the daily, the weekly, and the other one on the monthly, missing that alignment, but still. So I can make a case for both. And if you have mixed signals, and the market has been very bullish, if the current market structures and price action is mixed, and you have a very bullish previous market structure, or previously to this consolidation, I think it's safe to think that it's reasonable to think that it's going to push higher in the end, because it's not clearly bearish. It's basically telling you that there's a structure, a case to be made up as well as down at the same time, and we're coming bullishly. It hasn't broken any structures yet. Hasn't broken that bullish trend at all. So I would say it's safe to expect price to continue higher, in the future. But that's just a really rough, idea. Best is to just read price action, wait perhaps a week, two, until we get to see if we have a weekly structure being created that was created, and then see if it gets respected when we come back to it. This is what I meant. I already marked it. This structure being created. If we are able to come back and react from it, I think that was going to be the cue for the market, telling us that the bearish structure is going to be the structure to be followed. And if we fail at that, we should be looking for this area again for a retrace for that continuation. So basically, this weekly, I'm waiting for price to tell us if it creates it, one, and two, how it comes back and how it behaves during the retest of that structure.
Now the hard part, going into the lower time frame. What do you see? Going to like to 1 hour, 15 minutes, because a few people are fighting at this point. I think some of them are short right now, others are long right now, and which be within that small structure on the 15 minutes, 5 minutes time frame. So
I would currently for the day I see the thing is yesterday we had this reaction from the daily structure, and what is in the opposite direction, right? If you got a short from in here from that daily structure, what is the next reaction you have? And that would be the weekly structure we have below. And that's why I have the TP there. And basically it already reached it within the same day. So I had a sell signal, and that would be a sell setup, and I would be selling it, but to me, erring on the safe side, it already reached target. Now, if I see, do we have continuation or do we have rejection of this? Remember, this line is related to the weekly order block, and on the 4 hour, the daily, so far it's not close, but the 4 hour, the structure is still bearish, right? The order flow is still bearish. See that outside bar being created on the H2? So it allows me to continue or to expect the continuation of that daily move that I just mentioned, even though to me, if I'm in this trade, it is because I took partial and I still am holding. I'm taking here. It's not going to be a daily structure anymore, although it's using that daily momentum, but it's not going to be a daily trade. It's going to be a day trade because I just want to go more cautious to the next level, to the next leg, and not holding this for much longer. So that would be an H4 order block, which we just have here. Of course, we have CPI coming in about 3 hours and 10 minutes, if I'm not mistaken. Not even in about shy of 2 hours. Yeah, shy of 2 hours. And this is the H4, and I would be looking for reason in here to short it. It actually already came back and retested. It did not come back to the H2 that we had, and neither it did for a fresh H1. So basically, that wouldn't have triggered me, but anyone could, from let's say the last 50 minutes or so, have been looking for perhaps a reason to go short here. And we can go perhaps find some 30 minutes structures. There you go. You got 31 minute right here. You got alignment, and you wait for price to come to this way. To me, this looks short. Comes back because we have the H4, right? We have the H4. To me, that already tells me that the market is weak, creating bearish structure. I want to be shorting this, period. And either it comes to an area where I have alignment, like in this case, the H2. Maybe that's still going to happen with CPI in 1 hour and 40 minutes, or it's or you can already get ahead of the move. If you have extensions and maybe you get out before the actual news, you can perhaps short this order block. And if you go to lower time frames, I'm pretty sure I can find the areas. Whether or not it came back, that's another thing, but this would be the case, right? This is this bigger one is the 30 minutes. Let me mark it as such. I think I still have yes, that's the 30 minute, and this is the H4, right? That's the H4 right here, which is 3,349 and some change, where it came back, and you should be looking then for a quasi or whatever it is you trade to catch that move. Obviously, that already happened. So but I would be looking perhaps for something like that, maybe a continuation of that. Maybe it comes back. Let's see if we have a trade. I don't have anything on this time frame. Maybe on the some other time frames. Neither. Not really. Well, it's not a lot, but I would want a quasi to actually. But that's just me. I mean, my entries are based on the quasi price coming back and creating a quasi in the meantime, and I don't see that. Maybe there isn't going to be one. Yeah, I don't see any area here that I could be. Well, maybe if it pushes a little bit lower, then we could have this area where it comes back, and I would be interested in shorting that. That's on the 2-minute, perhaps, but it needs to go a little bit lower, at least this low. So break this low, this swing low. I mean, right here, it already kind of kissed it, but I wanted to go much lower, at least. Not a tid, a little bit lower and come back, and then I can take that short from that area. Something like this would make sense to me. And then target and getting in with to the next structure. Let's see what would be the target for that. We don't have anything to the left. Look at that. That's a beautiful. These are the ways you want to be shorting, because there's really nothing to stop you on the H2, H1. Let's see if we have anything. We don't have anything. But this was NFP, of course. Yes. Okay. So we have H4 order block. That would be a nice structure. That could be our target. And you can see how the high risk reward ratio starts playing out right here. It's not exactly like the way that I would be trading it, but I mean, I could take this. It doesn't have the alignment that I typically have, but I mean, it doesn't have to be exactly as my trade plan. You can build different variation of these alignment patterns or alignments, and still trade them successfully. So basically something like that. That is without any retracement to the higher overlapping. This is the area that I would want to be trading, but it doesn't always come back for that retracement. So that would be something that I'll be interested in, and obviously target that all the way to the target for a swing trade. Is that that would be 47, and that's not too crazy to expect price to do in just a day or two. So it doesn't even have to be a huge swing trade, but that would be something. If I were to trade something, I would be taking a short from here, either from here or from a little bit higher, as I just mentioned. So short, to me, a short. Obviously, I don't know what the CPI will bring and how the market will react, but if given the information we currently have, I would want to take a short from here, either before the news or after the news.
Perfect. We have Kevin. Actually, Kevin just scalped it a little bit. I think he got some points out of a potential short. Yeah, there you go. Like if you are literally scalping and you have a ranging market like we have today or this morning, for sure you maybe can find some opportunities. Try to sell the top, maybe by the bottom, or place your target at the bottom, and maybe you can get some points in there if that's your approach, if that's your strategy. Good job, well done. And this is exactly the type of markets that you can benefit from. With several entries, even not just enter one time, but we can even get several times the entry as price keeps coming back to the tops. Good job. And Nelson mentioned I'm thinking of leaving gold when even break. I've been in for 10 hours. Maybe there will be manipulation before the breakout. Hope it's positive for me. I'm not really sure anymore. Nelson, this is something that actually you can implement in your own strategy, okay? Or can try to start tracking the trades that you take. If they just get stuck for many hours within your entry point, what usually tends to happen? Do you usually tends to go into stop loss, or eventually price evolves into your take profit? This is some data that you can start collecting as well, and you start decision, or at least plan ahead and to know, okay, if price doesn't really evolve in a certain period, or if it just keeps respecting the same tops and the same bottoms, what do you want to do? If that still kind of has a high probability of working on your side, just keep it. If it starts noticing that those trades doesn't really work as you expect, maybe find a way to manage your trades and maybe get out with a small profit or a break even or something like that. But that's maybe something that you can start thinking about and find ways to implement into your own model. Yeah, that's basically the answer to that one.
James, for your information, I have no teeth. I have no teeth. I'm just kidding. Obviously, I do have teeth. All right. So
Oh my god.
what are you looking for? Are you maybe I could take a trade on gold if it if something presents, maybe I can take a trade. We can not take it together, but if we get some kind of a reaction from this order block, maybe we can we can take the trade short, and we can decide actually live, and I can go through my consideration whether or not I'm going to hold it through the CPI or not. I think that's very helpful to see how others do it. I don't mean to say my way is the way, but it's helpful to know at least what I'm considering when I'm thinking, do I take it? Do I not take the trade? Hold the trade through the news. So yes, but we'll see. We'll see if it if we'll see what it how it develops in the future. Okay. What about the euro or pound dollar? Are you looking for anything there?
Which part did you say? Sorry.
Euro or
Okay.
oh, but of course I'm starting to thinking about things to analyze, but I see some great traders in the background coming in, so we need to start wrapping things up. Just so we have we did not take away, time from the viewers of exposure to these great traders. Pedro, how was your weekend?
My weekend? What did I do over the weekend? I don't even know. I'm getting ready because I'm going on holiday next weekend, so I'm starting to prepare to go on holiday. So it's more of preparation, trying to get everything sorted before I go. So that has been my priority, and still going to be my priority for this week. I have a few things to do. Trying to find just A+ setups of trades. I'm not going to be spending too much time looking for war time frames this week. Just because my priority is somewhere else, and my focus is somewhere else as well.
You said getting ready to go away?
On holidays, yes.
On holidays. Didn't you go on holidays like 2 weeks ago? I mean,
Portugal, which was worth the time, and that was in June already, and now actually it's quite warm in UK today, but usually in UK at this time, like the summer finishes in July. Like August is already it feels like autumn already. It's raining outside. It's like it's not exactly the same. So it actually feels good to go into a summer holiday weather temperatures where I can actually enjoy the beach, enjoy the heat.
Man, these traders keep traveling. I can't keep track of them.
Exactly.
All right, so we have the gentleman in the background. Are you guys ready to come on? I think you are. Yes, you are. So would you like to play the intro, LJ, and Pedro? Any last words before we hand over to these gentlemen who will take care of the audience for the coming hour or two?
That's it. Thank you, guys. Later on, we still have the Portuguese live stream. We're going to have actually a guest that was It finished in 5th of the trading competition that he did, so it's going to be interesting to see his strategy. How did he approach the competition? It was actually a good return. He made like 80% in 2 weeks, so that's still a great result. And they're going to do a giveaway as well in there, so that's great. So yeah, that's going to be also something later on in the afternoon. Before that, of course, we have CPI, so good luck with that. Good luck for everyone, and try to stay disciplined with the CPI. So yeah, I give the word to Griff and LJ, which they are going to jump in any second.
Yes.
What's up? What's up? How you doing?
How we doing? Oh, why we've still got Victor and Pedro up here. Hang on, let me shift this around. Actually, we'll go to yours.
Sounds good.
Just add ourselves. There we go. That's better. That's better. Here we are.
How are you?
How are you doing, guys?
All doing good to see you. Hi,
How we going?
Timothy.
How we going? How you been, Griff?
I've actually taken a trade, LJ.
Oh, really? Really? Show us.
Yeah. I was thinking, this is so perfect because it's literally like 2 hours before the 5ers live stream. So I'll be able to tell you guys that I'd taken a trade. I was really excited. But it tagged me out literally straight away. Just one of those.
Oh no! What would have been? What asset is this? That's great.
I took this reversal short on EJ. I don't know what the fundamentals are looking like or anything, but technically I thought this looked really good because we've kind of got this larger ascending and then a smaller ascending, which is I see on EJ all the time, super high probability reversal pattern. And on top of this larger ascending into a smaller ascending, we're breaking above this old high. And on the higher time frame, there's an even larger ascending. So I was kind of seeing this, let me see if I can draw this, big ascending, we've got the reversal, and then we've kind of got this ascending, and then a smaller ascending again into this like liquidity area. So it's like a larger flag. So I was imagining a pretty large reversal down. Like I love this the look of this entry, but I think my stop loss is a bit too tight.
Yeah, okay, yeah. I see. So wait, so you're still in it or you got tagged out already?
Yeah, I got tagged out like basically straight away. You can see this candle here took me out. So I set a pending order on the low of this inside bar after these two breakout candles. And then I got tagged in and then tagged out on the following hour. So yeah, normally I use a 12 pip stop on EJ. I was like, it's looking quite small. I'll extend it to 15, but even that was too small. But yeah, I think it'll still end up moving in that direction. I just tend to use quite a small stop loss. That's what I found is optimal.
Yeah, fair. Yeah, yen pair's been a bit weak. Definitely, we do have that euro weakness at the moment as well. It's been a bit slow today, but euro's definitely been sluggish. But I think it's that dollar yen, pound yen still running up. I guess given that few legs on euro yen still. Mm-hmm. So yeah. But damn, son! Finally got a trade, but stopped out right away.
Yeah, I think it's been a month. So 1 month since my last trade, and stopped out within an hour. It's kind of ironic.
Yeah, rough. Yeah, we don't have Mike today. He's got a meeting, so Mike's out unfortunately for today.
Oh, fancy meeting
with us. So we'll just be holding it down. But
No worries.
How's everything else going?
Yeah, otherwise
well,
all
in
good.
general?
Yeah, I'm fine. Just tired, which is my normal state of being now. How
Yeah.
about you?
Yeah, same deal. Just working away. I've been a bit ill today though. I've got
Oh,
some kind
really?
of stomach bug going on. Yeah, I don't know what's happening. Don't know. It's just sort of popped out of nowhere, but we carry on. We
Yeah,
survive.
fair play.
So, let me. I'll show you what I'm in today. If I bring
Yeah,
up.
I'd love to see.
So yeah, today's been a bit sluggish. I am tentatively short Eurodollar still at the moment. So if we don't make much of a move coming into CPI, I'll somewhat reconsider it, but I am leaning on a higher CPI coming through. So because we're starting to see some of the services inflation pick up, as well as some of the prices paid inputs from some of the other data with the PMIs and that kind of stuff as well. So yeah, sitting in that guy, we got to break that 116 kind of level, and then the further push beyond that 115.90 from last night first of all, and then down to 115.80. So see how we go with that. Let me put some music on as well. We're missing our good old background music.
Some lo-fi beats.
Where are we? Yeah. It's fine.
This trade you're in. EU does look good to go short with my technicals as well.
Yeah, I was looking for a higher entry. Coming into London, ideally I wanted to see a further move up here into about that 116, 35 to 40 kind of area. But we just didn't get it. I mean, Eurodollar's been absolutely, just lackluster today. So sluggish. So sitting in that, I've still got a Aussie dollar short as well. Obviously, we had that RBA today. So Reserve Bank decision. I didn't trade that prior. I did buy up off the bottoms here, but then I didn't re-enter short from there. But we've seen that continued weakness. So now after cracking, these bottoms pretty firmly and right into that 64 cents, I want to see if we can get a further push down here to about 64.70 or so for today. But yeah, we're now basically tackling these lows here, these wicks. So this is next point of call to run through at the minute. But
very nice, yeah.
Yeah, overall it's been a little bit sleepy today. Generally, obviously we've got CPI coming up, which is why, but I can see more height on the Dixie right now, so I'm happy to lean into that from where we are. But yes.
Last week, when I was on the live stream with you guys, I think we were taking a look at EU because it was in quite an interesting area, and I think we all anticipated buys, and within within 2 hours of our call, of me hopping off anyway, we had like a big move to the upside on EU. It looks like you took you took a position there. Actually, I didn't realize.
Yeah,
around the 6th, that bottom one.
Oh, through here, yeah. Wait, no. Where's the
even earlier? The 5th.
No,
It was on the 5th. Yeah, that one.
Oh.
We were taking bets, and we all thought it would go long, and it ended up going long. It looked really good. I was kind of expecting it to break that low before doing so, though. The low off to the left.
Yeah, down through here.
Yeah.
And come down into that lower, that sort of lower area marked out with the 200 moving average down there as well. We got that. We got a pretty solid run up. On Euro after following that. Obviously, there was the terrible revisions with the payroll data, so we got that continuation through there. For today, though, this is looking terrible. I think we do have that downside coming through. See where the CPI lands, because obviously we're playing, ping pong back and forth with the, probability for the Fed rate cut for September. But yeah, after we get down here somewhere, I would start looking for longs for Euro to keep punching higher again from there. Especially now we've got after Trump coming in and firing what was her name? After the bad payroll data, I forget, but he's put in that new guy. So I think there's going to be a bit of turmoil now with the forward, jobs numbers, because people are going to say if they're higher, they'll start looking at it like, oh, okay, is this data, trustable? Is it skewed? And then if they come in lower, people expect, wow, there's a chance they could be even worse than what we're seeing. So yeah, I think we've got a bit of asymmetric sort of outlook there for the markets, because that's going to make it really hard to now price the forward, Fed moves as well. With that. So,
would you say it's a pretty busy week for news? I think there's a couple high impact news coming up this week.
Yeah. I mean, we've got CPI today, and then the main next parts are, I guess, was it Thursday, I believe, PPI and the week-on-week unemployment claims. Because those week-on-week claims now are going to be more and more looked at after the terrible payroll numbers with the revisions. And then we got retail sales on the Friday as well, which is going to be important for the consumer. So we've seen consumer getting a bit knocked around also. But yeah, so generally tentatively long dollar for today, but we've got to get that CPI out of the way for today. I don't think there was anything else on the cards for today's data.
I just avoid the news releases. Play it very safe.
Yeah, no, that's completely fair. Totally fair.
Yeah, I can definitely see price moving down from here, or at least like whipsawing from the news event. Like I can imagine it wicking to your targets and then moving back up or something.
Yeah, exactly. So I think if we do breach into that, deeper into the 115s again, I think that will be the extent of the move for the time being. So we've also had pound, really run up. Pound doesn't quite look like it's done. I think we do want to see a slightly higher move after that 135 before sells. So ideally, say if we get that stronger CPI, you get that pullback, you get a chance for an entry on the pound to then pull back, retest, and then drive higher. That's kind of what I'm looking for today. But it's a little bit mixed bag, obviously, without the CPI actually being out yet.
Yeah, I see. It's great that the pound is up so much because I'm in the UK. All my money's worth way more since COVID. Well, to be fair, COVID it all went down loads, but it's nice to have 30% increase in my net worth since 2020.
Yeah, exactly. I mean, after Brexit, man, you guys got absolutely smacked.
Wasn't great.
Yeah.
It's crazy because if I recall correctly, when I was a kid, a dollar, the pound was worth $2. So it's gone down so much in my lifetime. It's from 2008 or the 90s, it's literally halved, which is kind of unheard. Well, I guess I don't know if it's unheard of, but it's crazy to have such a huge drop just in my lifetime. Like my parents who would have been working and saving, if they have everything in cash, which they probably do, that is worth half as much as it was compared to the dollar, which is just crazy to think about. I don't zoom out that much, normally just looking on the hourly, but on the monthly, it's very interesting to see the larger, way larger scale, you know what I mean?
Yeah, no, definitely. That's sort of you can see the Aussie dollar here as well. We had the GFC tanked off, and then we're back above. We're $1.10. We're above parity with the US dollar.
Wow, that's cool.
Yeah, no, that was everyone was holidays, all that kind of stuff, importing cars from overseas and everything.
Yeah.
But now, right, we're right back down at 64. That's sort of longer term average, I guess.
It's so interesting.
But yeah, so complete, carnage after that.
Are you hoping for a big blue candle like that you've got marked on right now?
Yeah, I think that's from one of the there's like a trend line.
Yeah.
Got on to it, and it's gone parabolic. Yeah, I mean that'd be great.
If that was a forecast, that would be nice.
Yeah. Massive longs from here.
Yeah.
But yeah, back then, that was when we had GFC. So US wasn't doing too well. Australia managed to avoid the whole banking crisis thing, and then that was also when China went into mega spending mode, right? And our biggest trading partner, so we benefited.
I see.
Greatly.
You've been trading that long, right? I'm sure I've heard you. Oh no, maybe not. You've been trading over 10 years, haven't you?
Yeah, 13 years. So when I first started trading, a lot of what I picked up was shorting the Aussie dollar from there. It was up about 98 cents, and I was this is not gonna stay here for long, right? So I was just happy to short the whole way down, which was a great time. But
there's a few trades which are so obvious, not even in hindsight, just at the time. You know what I mean?
Yeah, no, definitely. It's like same with any of the massive dips you get on. You see indices down 30%. It's always you're finding
an obvious buy. Yeah.
You just gotta size everything correctly. Like if you're using leverage, then it's a bit hard. But we can have a look at the DAX, Cherry.
The DAX I've heard interesting things about the DAX for when I was looking at liquidity sweep entries. So just selling above the highs, buying below the lows. I hear on the DAX it works out very well.
Yeah, definitely. We're on. I think we touched on it. I was on earlier about an hour and a half ago or so. And we looked at the DAX briefly there. It was basically, looking at this level here. If we break that, running down, you manage to hold it, we'll get a run back up into that liquidity up here. We've obviously broken down, so I think we got a bit more downside. Obviously, you got these wicks down here, and just by that massive drive up. That was that would have been the last Thursday. That was the 7th. What do we have then? God, it's always so hard to so much going on in markets now. I always try to think about what happened last week. I'm like, was that last week or the week before, or was that 2 days ago? Right?
Yeah, I know what you mean.
But generally I'd see a bit more downside, Cherry, for the DAX. So if you're short already, just hold on to that. Your first point of call is going to be 23,900 there. And then see how we test with that. I think the Nasdaq is looking pretty similar.
I agree with that for the DAX.
Yeah. So Nasdaq, we're pushing up against this sort of area just here. You can see, right? So you get a breakthrough here about that 23,500. Probably got a run on further down 23,450 or so. Similar structure, but the NAS is just holding up a little bit better than the DAX today. So
it's interesting because I wouldn't imagine they would be moving so similarly, but I can see what you mean.
Yeah, it's because we it's a lot to do. So earlier in the year, we had the sort of European indices front running the US indices, on the back of all that extra defense spending and that kind of stuff. And then there was a lot of concern around, the dollar, the debt profile for the American administration, what Trump is, going to do or not do, and flip-flopping back and forth. But now, seeing as we've sort of calmed down, they've gone back the other way, and the US indices are sort of doing a bit better relatively than Europe. Now, so
that makes sense. Do you, with indices, do you have any long-term holds?
Not at the minute. I did, but I've sort of liquidated that stuff a little while ago because basically around COVID, because we had the chaos there, and then I find I can make a good bit more trading.
Yeah, that makes sense. That's fair enough.
Yeah, so I sort of jump in and out depending on what else I've got going on, how the other environment is, for, say, it's currencies, commodities, that kind of stuff. But yeah, particularly with this recent bout of volatility, I guess, with Trump, I found, just day trading stuff pretty good.
Yeah, I'm with you. I have a bit of both personally, because I guess I don't want to be trading like my pension yet. I just try to keep it separate for that reason. Two different accounts. So yeah, I just buy the S&P every month, and then I also trade. That's my approach anyway.
Yeah. Yeah, no, agreed. I'll be doing the same over the next couple of years, but I feel like for now, I've got that time where I'm willing to put more raw time into just like sitting on the charts and that kind of stuff. So I might as well juice it out.
Yeah,
ultimately, of course. You don't want to be doing that forever.
Yeah.
But for the time being, I'm happy sitting there with that stuff. So
nice. That's moving into profit.
yeah, gradually. I mean, we're sort of just trading sideways, really. Like if you go down to, say we go down to a 5 minute, we're sort of just wafting about through here right now.
Wafting about.
Yeah, we're just. It's been just sloppy all day for the euro, but I think we will start to kick on with that move lower. The Aussie dollar is definitely pressing on, so that's going well.
Yeah, that looks good.
I
know that when that pair when it trends, it really trends. So I wouldn't be surprised if we just keep, making lower lows from here. Trends quite correctively. Yeah,
exactly. Because the RBA stuff today, they signaled that chances are further rate cuts coming down the line as well, which is a bit of a switch from the prior meeting. So they're willing to sort of sit on their hands, but we've seen a bit more weakness coming in. As far as the labour market's still doing pretty well, but the CPI came in lower, so giving that ability. US dollar being strong today, yes, very much. So as far as the Dixie, I want to see this move sort of continue. We've got this high resistance level about 98.80 for the Dixie up further. So that's another 20-30 points on the Dixie, which roughly correlates to this similar kind of move, about 30 points down on the euro as well. So that's what I'm looking to play out for today. Gold. Any thoughts on gold, Griff?
Let's take a look. I don't really look at gold too much. Honestly, quite similar to the other pairs, where like literally the last week, it's kind of not made any progress up or down. It's just been moving like sideways. In this week's price action, I'm starting to see some weakness to the downside. I would say that we'd be looking more at buying opportunities in the short term, but like I don't really trade the lower time frames. But yeah, I see that we're kind of breaking below this range, and within that range, I'm seeing quite a lot of buying pressure. So I wouldn't be surprised if there's some people getting some orders filled at a pretty nice price right now to go long. That would be my thoughts. But yeah, I'm looking just at the 1 hour. I don't know if I zoom out. Yeah, I think it's still long, even if I zoom out, to be honest.
Let me jump over to yours real quick.
Sure. Yeah, so I'm seeing this is what
we go the ABL. There we go. That's better.
There you go. You got it. Yeah. So overall, like I said, we've kind of started last week around the 350 level, and we're still around that price now. So we've not really made any progress. So I would classify this as kind of just sideways price action. I mean, there's an ascending, but we didn't particularly break out of it with a lot of momentum, which doesn't really convince me that we're going to move to the downside. And now we've reached this area where we're breaking below these lows, and when we're just struggling to move lower, breaking and retracing lows, wicks on the downside, shifts in momentum to the upside. Sorry, police car going past. Quite large wicks as well. And now
your door. Open up.
Yeah, I'm fine. I'm fine. Yeah, so now we're kind of breaking below this level, which I like the look of because there's this big push up. We've got multiple taps. So yeah, we're rejecting already. I would be looking for buys right here, the short term and long term, honestly. What do you think, LJ?
Yeah, similar deal. So I was looking at that channel up there as well, all through last week. If I zoom out a bit, we sort of had that guy broke right down through it, and we do seem to be finding somewhat of a base here. We were starting to sort of cup through there. That hasn't quite held coming into the end of London, and would have liked to see us build off of that bar. We end up creating the wick and coming down further, but just like you're saying, I'm seeing buying pressure starting to come through here at these lows. So basis of probabilities, I'd probably see higher price action overall. Probably, following CPI, I think we need to get that out of the way. But as far as the downside, I mean, you've got this 33.30 level, probably at the full extension. So yeah, probably wait for CPI to clear, see if we just get that bullish candle running right up, and then I'd be seeing that 33.70 or so, testing the underside of that channel that we had from last week at the minute.
It's great that we're on the same page. We both think the same thing.
Yeah. Because gold, you often get this kind of stuff where you do that. You slightly tap over it, right? Give this kind of false break, and then it just comes right back into the prior sort of price action, and then turns around and reverses, right?
Yeah,
very common. Henry saying, yeah, for people to put Bitcoin in their super. I think more and more that's becoming a thing. I think they're trying to change the rules now in the US to add Bitcoin and cryptos to retirement funds as well. So I wouldn't be surprised to get more of that coming through here as well. I think Australia is a little bit less favourable to crypto though at the moment. But
Ethereum did really well in the last week, I believe. I'm up just in the last week. It went up about $1,000.
Yeah, all-time highs. Hey, yeah.
So I'm up. Yeah. I'm up like $6,000 as of last week, which is really nice.
Nice.
Each of my Ethereums have gained $1,000, and I've got 6 of them. Yeah,
this. That's good. Yeah, because everyone's been waiting for it for so long. We're lagging on ETH. It's like, God, is this ever going to come? But yeah, we finally got that massive punch through, which I think in part is because people have been getting frustrated with Bitcoin not sort of running on. We're just like very slowly kind of grinding up, right?
Yeah.
And crypto is always full of so much like hot money, right? People just trying to chase returns and that kind of stuff.
That's a good phrase. Yeah, that's very true.
Yeah.
Yeah, because Ethereum, I've been holding it now for, I think I've said this bit before, but I remember in 6th form when I first started trading and I was looking at crypto, I remember Ethereum was less than $10, and I wish I would have had the knowledge to buy and hold then, because I bought it and then sold it at $30 or something. I'm like, I think I'm a genius. I tripled my money, but if I would have just held, which I do now, it could have made a lot more. But yeah, this recent, the 6 Ethereum that I hold now, I've been holding that since 2022 when it had that big dip. And the whole time, it's not been an easy hold. The whole time, the last gosh, how long has it been that I've been holding it? Like, probably about 3 years. It's just been like not moving at all. Everyone thinks it's dead, and that there's like, and like Solana is better, you know. So it's reassuring to see it actually moving up now, maybe approaching all-time highs soon as well. But yeah, the nature of my trading strategy goes well with the nature of my crypto investing strategy, because I basically just have to be very patient.
Yeah, no, we've been stuck in this big range, hey? And it's just been, you know,
it's not very
nowhere.
pretty.
We haven't, it's not been pretty, but hopefully we're now getting somewhere. Find some way.
I always saw Ethereum as kind of like the Bitcoin disruptor, so maybe like a slightly more high-risk Bitcoin, which is why I invested in it in the first place, which is ironic because then Bitcoin goes on to trend up really nicely, and Ethereum is moves quite safely sideways. So I didn't get what I wanted out of it in the end.
Yeah.
Until recently, I suppose.
Yeah, exactly.
I'm targeting, I'm hoping maybe in the next 2 years or so. I do have a target in mind for selling because I have some like real estate investments that I'd like to put some money into. So I'm targeting $8,000. That's when I would like to sell. But obviously, I don't know when that may be. So yeah, it's not one that I'm going to hold forever, like you should. I'd rather put it in like a second house or something.
Yeah, well, I mean that's what investments are for, right? They're, delayed spending now, so it can grow and you can spend it on something later, right?
Yeah, exactly.
That's what you want. So, Raymond's asking for a pound, so we'll check our pound. So, I mean, we're finally dipping down. Euro's just taking another small leg lower, so pound's also coming off now with that. Give me my brush, here we go. So this cluster just in here, back into the moving averages, you got the 200 as well as the 50 coming in here. And it's roughly the heads of this sort of price action we had through here, right? Earlier through Asia. So I'd be looking for a bit of a pullback into here, see how we test there. Obviously, trouble is we'll be coming up pretty close to CPI once we get there. So I'd probably wait for CPI to clear, but depending, we might get the run higher. Trouble is CPI, I'm expecting it to come in hotter, which would mean we'd end up getting a bit of a breakthrough there. So next point would probably be down here with the lows just before the data earlier on, and then look for buys from there. Because the upside on the pound, I don't think we're quite done the entire move just yet. If you go out to the 4 hour, we've had some pretty sustained strength the whole way along. So I could see the 135 coming back into view. Obviously, makes it kind of hard to see with all these drawings on here, but yeah. But yeah, so I mean, if you're not already short on pound, I'd probably just hold off until we get the CPI sort of cleared. But I mean, you've got 134.40 and then 134.20 with the lows from earlier today to sort of lean on if you're looking for longs there.
Is your long-term or higher time frame outlook short as well?
Ultimately, hang on, let's go to the daily. So ultimately, I'd see a bit of a pause point here after the strength that we've had, and then a slight pullback. You've got that 33.80 here, right? Those old prior levels that we broke through and then managed to come up and reclaim. But I would see longs longer term, just because of that asymmetry with the dollar, like I was talking about. We're ultimately pricing lower rates in the US. It's just how quickly that's going to come through. And if we now see that sustained weakness in the jobs market, then that's going to have to come through quicker. And then you obviously have that question with Trump influence now, after firing. I keep forgetting her name, but the prior head for the BLS, and putting in who he wants. People are going to be questioning it now. Are there fingers in the pie, and how much can you actually rely on that data? So I would expect us ultimately to come back to a bit of dollar selling, and that to come back into vogue. But right now we're just trying to gauge when this next rate cut is actually going to come through, September or December. So the counter to that, I suppose, is that forward pricing for like inflation is pricing a lot higher, looking at about 3.3% as far as markets, people putting real money down, projecting out 12 months. So that would be significantly higher than the Fed's current targets at the moment. So that's where it really gets messy, because then you have to determine whether people are hiring that price of inflation, that higher inflation, because the Fed will have cut by then, and therefore that's going to loosen things, which therefore will allow inflation to come higher. And if that's in part due to it, or purely due to the tariff impact. So Ahmed, Mike he's got a meeting, so he's out for today, unfortunately. But yeah. And yes, less than 56 minutes left for the news, my man. CPI, don't get burnt, is all I'll say.
And watch your 5% accounts, because don't open any trades around in 56 minutes. You can close trades, which is great, but don't open any trades, at least on your high stakes account, right?
Yeah. Because that and Pankaj, dude, if you're long dollar yen, depending where you jumped in, I would be, cautious going into the CPI. We're going to get a bit of whipsawing probably. I do have the general lean that the CPI will come in higher. That's sort of what the prior data has shown. So you should be in a reasonable spot with that. But depending where you entered, we've been running up all day. So assuming you entered at some point either early Asia or early London, something like that, if you got some profit on the table, I'd probably, jump out, just take your profit, sit on your hands, wait for the CPI to come through and clear, and then find new levels after that. Because the risk is if it comes in lower, then dollar yen is going right through the floor, right? So there's been a bunch of distortions and stuff in the data for a while because of that front leading of companies pulling forward inventories. And then so even though the tariffs had an effect on higher prices, they've still got that backlog of inventories that they're still working through. So they haven't had to increase prices yet because they front run the tariffs. So once that gets worked through, that's just going to be a matter of time, which is what everyone's keeping eyes on. So
USD JPY is an interesting one. I find that it's a currency pair that I think I've mentioned this before actually, but it's a currency pair that it should make sense. It should work with my trading strategy. But for some reason, the break and retests doesn't really respect my break and retest levels very well. The flags work out well, but for my continuations and my reversal entries, it's disrespectful. It doesn't reverse where I'm expecting it to.
Yeah, I think that'll probably be in part. Normally, dollar yen in particular it's traditionally a very technical currency. But yeah, I think it's all those moving parts at the moment with with Trump, the US administration, rates, the bond market, all that kind of thing. We keep flip-flopping back and forth between the sort of forward sentiment outlook that the market's looking for. So yeah,
we'll get a large move like you've got on the screen now, and then you're expecting it to maybe start trending, but then it'll just retrace straight away.
Yeah, exactly. Yeah, because we shifted to that. Very much the outlook for rates coming down later, right? And then bam, we got the NFP revisions and we just absolutely collapsed, right? And so the market very much is flip-flopping back and forth between that. And same thing at, at one stage we were looking at the breaks through here, and that continuation of the sort of larger trend this year of dollar selling, only to reverse that and climb right back up, right? So we keep flip-flopping back and forth. The same deal when we ran up through here and then absolutely cratered down. So, but if you catch some of these extremes, they've been pretty good.
Yeah, I think it's probably better for the sweep kind of entry I described. Are there any other currencies that you've taken a fancy to this week, LJ?
Not this week so much. I think we're in, again, that sort of digestion sort of phase, particularly, last week was very much that after, going through the payroll revisions, and then we've had the rate cut probabilities flip-flop from, last Monday was 97%, went 94, 90, down to 85, back up to 87, down to 84, up to 90, and it's been back and forth like that. So I'm sort of waiting for that to, play through, to get a bit more direction there. And then I'll sort of start formulating some of these larger ideas where we are. But yeah, I mean, other than the staples, you've got old majors, Euro dollar, Aussie dollar. That wasn't too bad all through last week after the payroll revisions. Just played that right up and continuation of that. So
it looks like you only hit winning trades on EU.
EU has been very good, very faithful to me.
Yeah.
Yeah.
I play.
And I've just been sort of with that, just very strategic in those trades at the minute. So I'm not jumping into stuff all over the place. Being very selective. Like even with this, like I ended up entering late because I was waiting for the sort of better entry higher. But today we just weren't getting it at all. So I was like, okay, if I can try and sneak something out before the CPI, that'd be great. Which if this hasn't kicked on before we come to the maybe 15 minutes before, I'll probably close this out just for a small profit.
Yeah.
I've already got the Aussie dollar trade, which is ran on fairly nicely as well. I'll probably close that out and just take that for now. If there's any things that present after the CPI, then I'll jump in there. But if not, I'm happy to take that. So,
Yes.
Elsane was talking about other trades, non-USD related, like pound yen, as far as going into CPI. The thing with that is always going to, say if you have something like pound yen, whatever shuffles through with dollar yen, it's very much going to affect it. And depending just how far outside the expectations for the CPI are, you can also get the risk on, risk off type flows coming in through the yen in particular. So not expecting CPI to blow out one way or the other. So you should be safe on that metric, but it's always something to consider. Like say if it, we saw a CPI number that came in way above what anyone's seeing, that would also have further risk off flows as far as we're now seeing, danger to the economy. As far as prices going higher, that hurting the consumer at the same time as jobs are, starting to shelve off a bit. So that's always the risk. You're probably better off with something like that isn't going to get heavily hit in any kind of dollar cross correlation. So say something like Euro Pound or something else would be better. Ahmed's asking, would please go through the gold chart? What is possible levels today for gold on CPI either side? Yeah, sure, man. Can do. So we're talking about gold just a minute ago, weren't we, Griff?
We were, yeah.
I think the clear levels you've got defined here, right, that we sort of tapped through, we created this bit of a fake out, large wick on there, we've started to reverse. So this candle through here at about 33.50, that's what you're going to be looking at for the upside. to see 33.70 or so. Now, how this moves per the CPI, if we do get that higher CPI, chances are gold should actually come higher, right? The initial move, though, it could dip just due to that, the volatility, the dollar component of the dollar rallying before you turn around. So hence, I'd probably wait for the post period after the CPI to jump into something on gold. Because we are in that, it's sort of a mixed phase. You can sort of call both sides on the same number for gold, right? As far as the CPI right now. Because gold hasn't so much been acting sensibly per data coming out. Normally you'd see, gold's protected against inflation. You should see it move higher on higher inflation, but we've often seen the dollar component play a heavier role and then knock gold down despite getting higher inflation numbers. So yeah, don't have a brilliant setup for that for today as far as the CPI, but those are definitely your levels to watch. So that 33.50 through here, look at that as a potential run to the upside. Obviously, you got right here this 33.40 that we formed the bottom of these bars and had a slight dip through there. And your next point of call is going to be 33.30 here. So overall, I see more upside, just like we were talking about earlier for gold. So yeah, I wouldn't count on shorts running very far from here.
Yeah, that most recent candle looks really good actually for longs.
Yeah, definitely. I think especially if you go up to like the 1 hour like that.
Yeah, that looks so clean.
Yeah.
You see, it's not a bad entry to just market execute on these kind of candles sometimes.
Yeah, so long as you're not sized massively coming into CPI in case you get some kind of slippage. Then
I do agree.
Have the preference of going long through here.
Yeah,
if you were going to.
I think these candles in general are nice reversal points, but yeah, I agree. Stay cautious of CPI coming up, and maybe pause any trade ideas that you're having until after the news event's released, just to play it safe. It's important to trade defensively.
Yeah, indeed. I think that there is definitely a general lean in the market that, just like I was talking about before, and per all the prior data, that we will have that higher CPI. That's, likely part of the reason that Eurodollar has been so sluggish today as well. We're seeing it push further down now as we're getting closer. So yeah, the risk you always have with that is either you go with, the market, like, you have banks, hedge funds, that kind of stuff, pre-positioning, they've done the work, filling orders coming up to the release. That said, obviously, when you get that, if it does undershoot a little, you'll have a very aggressive turnaround. So,
do you think it'll make it to your second time? Oh, did you say you were going to close this one before CPI? Sorry, I can't remember.
Yeah, possibly. Like, the idea was to hold this into CPI, but I would have liked to see us sort of testing this a bit more aggressively.
Yeah.
So, over the next 25 minutes, if we're not really pushing on, we kind of stall out around the lows here, then I'll probably exit it. Like I said, I've got a bit of profit on the table.
I'd be surprised if it makes your second target before CPI.
Yeah, no. that would need CPI to run on from there. But I'd probably then look for, say we do get the stronger CPI, we pull back down to here, and I'd probably look for a long instead. So something like 60, I don't know, let's call it 65. Then a run back up, maybe towards 116.20 if you could get that. So that's probably what I'd prefer to do. Close this out coming into the CPI just in case. just to be sensible.
Mhm.
There's no point gambling stuff. You got money on the table, might as well take it, right?
Yeah. Do you risk 1% per trade?
It sort of fluxes. I sort of start out at 0.5, like 0.4, 0.5. That then also gives me a little bit of room if I want to adjust the stop a bit higher.
Yeah.
And then generally, if the trade starts running, and you've got the right entry, then I'll add another 0.5, and then sort of be holding about 1% total. So,
Yeah, that makes sense. I have a similar rule where I won't risk more than 1% per currency pair, but that means that quite often, because I risk 1% per trade, at least on my personal account. At the moment, actually, I'm risking 2% per trade on my personal account. But yeah, I always make sure that I've got risk off. So my stop loss is at break even or in profit before adding in a second position. And it sounds like you kind of have a similar rule where you won't go above 1% total risk per symbol.
yeah, generally speaking. Sometimes, if there's been a random headline and you can see stuff is just fluxing around, then I'll happily drag something up to 2% risk.
Yeah.
Just so that it's not getting hit out of a capitulation from a Trump tweet or something like that, because you tend to get that gyration and then move back in the same direction that you're originally going. So that, or if I'm taking a very confident entry at a really good level, but it's hard to, because sometimes you'll get a bit of an air gap below that area where you kind of overshoot, and then I'll take that kind of 2% just to give that protection to allow the trade to run. That'll normally depend on if I've picked up profits for the day as well, right? If I made 1% or 1.5% that day already, I'll be more willing to risk the 2%.
I see. That's interesting. Yeah, I try to keep my stop losses fixed. I mentioned at the beginning that I use quite tight stop losses, and it's because I've found, I used max adverse excursion, and I went through all my trades, and I found that most of my winning trades didn't really pull back any further than 7 pips. So what I did was I basically added a pip for slippage, added a pip for spreads on the entry and exit, and then I used a 9 pip stop loss universally for a while, because like I say, most of my trades don't, most of the winning trades don't pull back that much, but then it means that the win rate is not ideal. And these days I tend to use around 10-12 pips, just because it's a bit more comfortable. But even then, it's not really necessary. I can actually use a really tiny stop loss with my strategy. But yeah, with a strategy where you're targeting maybe 2R or 3R, you're not really targeting mega trades. It's better to use a larger stop loss, so you have a bit more breathing room.
Yeah.
It's difficult to optimize for that balance with stop loss and take profit, especially when you're using targets. It's difficult to kind of figure out the optimal target based on just looking at the data, because it's kind of discretionary, where you're kind of feeling where, this is a significant level that can't be quantified very easily.
Yeah, no, exactly. And yeah, similar to mine always depends as far as pips wise. It depends what the kind of ATR currently is.
Exactly.
If there's headline risk, say for instance today CPI or as a Fed meet or something like that, right? Seeing this, I've seen a bit of a reversal here all of a sudden. Another 1 minute.
It's moving quickly.
Yeah. There might be a bit of covering as well coming in.
Yeah, you might need to move your stop loss to break even.
Yeah, I'd probably go down to these highs. Chances are I'm going to close this before the CPI. I'll still give it another 20 minutes. Thing as we were starting to run on. But, we got a pound up right there as well.
That's interesting. I find that quite often when you get a big move before CPI, it's normally it's because the news is going to go in the opposite direction.
Yeah.
Like if I mean, this is obviously like 35 minutes before, but yeah, quite often when I look at the charts, like on the 5-minute time frame before a high impact news event, it starts moving up in one direction quite aggressively, and then the news event comes and it goes the opposite direction really aggressively. Maybe it's people getting some orders at a slightly better price.
Yeah, often that, or you can be covering that kind of stuff as well.
Yeah, true.
Like
Closing their trades.
It's like hedge out, or just exit altogether, right?
Yeah, that makes sense.
I didn't see any other headlines come out to induce that just now. We did have there's an EU spokesperson saying no timeline on tariffs, still waiting on US officials. But that's about it. So yeah, we're pretty much in the wait and see period for now for CPI. Gold is looking pretty decent though, if you are just especially if you just ignore news and you're looking purely technical. That's looking quite nice.
I agree. Yeah. That's me.
It's definitely a simpler way to live, I guess. You don't have to jump around.
Yeah. There's obviously my trading would be better with some fundamentals thrown in, but like maybe it would be like 20 or 30% better. You know what I mean? Like it won't change it too significantly. So that's my attitude towards it. So I try to keep it as simple as possible, because I introduce fundamentals and maybe it'll get a little bit more complicated, and I could also introduce moving averages, and I could also introduce volume profiles. Like there's so many things you can add in. But yeah, I've chosen my couple of confluences, and you've got yours. I really like your strategy where you've got fundamentals, moving averages. You've got just like the regular technicals, like highs and lows. I really like your logic. It's I think you've done a good job of simplifying your strategy as well, but the fundamentals do go over my head a little bit sometimes.
Yeah, you got to do that. I mean, that background work, and it's something that once you start doing, like you build up that back catalog and your past pieces, right? And you can build and build and build on that. But definitely first jumping in, you're going to be kind of what's going on? Like how do I measure this stuff? How do I interpret it?
My friend, I've got a good friend, Marco. He's got a YouTube channel as well. Maybe a couple of people know him, and he's thrown himself into fundamentals like these last 12 months from zero. And yeah, I think the first month is very confusing, all these new terms and phrases and news events, and then after that, you start getting the hang of it for sure. But yeah, you've obviously you're a master when it comes to that. It's very impressive to hear you talking about it.
Yeah, it's been after I guess like a decade,
a decade.
That long, like you get bored with just doing the same stuff all the time, that you end up that's sort of how I find it interesting. So I just
that's good. That's good.
Yeah. So nice, Henry. Nice.
That's very nice.
Yeah. Let me know if it's good. I haven't looked at any of the for dummies books for finance stuff, so I'd be curious if they're any good.
Well, you don't need to find out. I don't know if you would find it interesting reading that book yourself. I would. I'm a dummy when it comes to macroeconomics.
It's always hard. Like sometimes they're just it's like the most obvious basic stuff. It's not really teaching you something, right?
Yeah.
Because it's all the nuanced bits in between that really matter. It's like some of the stuff I picked up for whether it's FX or something, just at the bookstore and pick it up, just say like, oh, wonder what's in here, and just talking about like, this is a pip and this is whatever.
Yeah. It's funny. There's no. They need to come with like a difficulty level on these books.
Yeah.
Like when we were younger, we had reading age. When we're older, we need like IQ. Whether it's intermediate or advanced, or for dummies.
Yeah, exactly. I think we got Victor in the background.
Yeah.
Can you let us know when you're ready, Victor, as well. That's right, Victor. That's all good. But yeah, so if I'm gonna keep watching this just now, the zero position, see if we can punch back down. And I'm pretty sure I'm gonna close this before CPI. My lean is that we will get the stronger CPI, and then that would play out. But I'd rather just sit on the sideline right now. These numbers are being looked at so heavily after the payroll revisions that getting caught out on it, it's just not necessary. But what else is there on the cards? Hey, Victor.
Hey,
Hello.
I see you guys are taking advances on the fun. You're trading before the news. The volatility hasn't come in, but you already have some actions in.
I'm a spectator. I'm just a spectator.
Yeah.
When you came in, Griff, you mentioned you had a trade. Is it still on?
Oh yeah.
What happened?
Yeah, I took a short on EJ, and
Okay.
I got tagged out within the hour. So it's a shame because I'd been waiting for a trade for a month. And yeah, that's just the way it goes sometimes because I use such a tight stop loss. Yeah, here it is. So I took a short trade off of this inside bar. I was tagged in there, 15 pip stop. So set pending order here, tagged in, and then tagged out.
Okay.
So just one of those.
That was quick. That was within 1 hour. I see. That's a 1 hour time frame. All right, but that's how it goes, right? We take what is your win rate?
Gosh, my win rate, I think it's probably like 30%.
Which is, very similar to many trend followers. So, and that means we're gonna. I'm not a trend follower necessarily, but my win rate is actually around 30 as well. I think it fluctuates maybe a little bit, around 30. Not to say, not getting competitive here. It's not about that.
31.
31.5. The mine is. No, but it's around 30 as well.
Yeah.
And so I'm accustomed to that, to see losses more often than winners, which is completely normal for me, and I think for you as well, right? You've been trading this way for some time already.
Yeah, absolutely. I definitely get way more losses than winners. But then my average win is like 5%. So, one win makes up for 5 losses, which is fantastic.
You're risking 1% per trade.
Yes, but on my personal account, I'm risking 2% per trade. So my average win is 10% on my personal account. But that's obviously because it's my own money. I don't mind having a bit of go down.
And how do you keep yourself leveled mentally after such a big win? 10%? Yeah, I'm gonna be. Anyone would be out of themselves for at least a couple of hours on that win, right?
I take it with a grain of salt, to be honest, because if I get excited about the wins, I'll start getting upset about the losses. So I try to just be neutral with the wins and with the losses. So I try not to get excited. Maybe I buy a nice dinner if I get a nice winning trade.
Yeah.
Get takeout.
Well, how about you, LJ? Do you celebrate your big winners with some, being nice to yourself, buying yourself something, or taking yourself out, or doing things like that?
Yeah, normally similar deal. I'll go and get Musman chicken Thai curry, right? It's always chicken.
Lovely.
Chicken Musman. Yeah, that's always
I see.
my go-to.
That's your favorite, and that's because
it's my favorite. Yeah.
Just because it's your favorite, not because of the protein.
No, just because it's my favorite. Yeah. No.
I'll have to get some of that.
I'm getting a good meal, something that's juicy and it tastes great. So,
nice.
Yeah.
I do that too. I think it's a good thing to celebrate your winners. Don't personally, I think we shouldn't focus too much on the P&L going up and down, but like closing a nice week is nice to do something for yourself. I think that's it's nice.
Yeah,
Agreed.
I think I'd take the
Yeah.
wins. Sure. But yeah, thank you, Griff. Thanks for coming.
Yeah,
And,
thank you guys.
We will we'll see you next week and hand over to Victor.
Yeah,
So,
we
yeah.
leave you in very capable hands.
Alrighty. See you guys later, and watch out for CPI. Don't get burnt. All right. So
Thanks so much. See you guys soon. Bye.
See you guys.
See you.
Bye bye. And we are back. Let's see. We have, there we go. We have Deanna with us. The always radiant Deanna, Dr. Cole, joining us today. And I wouldn't want it any other way. Deanna, hi.
Hi, good morning. How are you doing?
I'm happy. I'm glad to see you and all of us, all of you out there watching us. Let's get this started. We have I was gonna say let's get this party started.
There you go.
But we're gonna be talking about graphs and not dances or beats or anything like that.
It's gonna be dances and beats.
You mean on the chart?
Yes, sure. Why not?
We have CPI coming in about 23 minutes, 22 minutes. So hold your seats if you are, if you have a heart condition, because it could be a very volatile ride the next, I don't know, in about 20 minutes or so. You could see the market do all kinds of funny things or absolutely nothing. Right? It can be anticlimactic and not do anything, just be like a very weak breeze, not moving anything at all.
That's right.
So this is an idea we talked about earlier today, which is the sell from the order block, aligning and all of that. And I have a second area right here, which might come into play. If the first one doesn't work, perhaps we could have a reversal on the continuation, not a continuation, but a deeper retrace into that H4 order block. This is not a signal. Absolutely not a signal. Not a advice, any kind whatsoever. Just an idea, a suggestion. It's something to inspire you to look for maybe opposing trade, maybe same direction. It's nothing to elicit any action from your part. It's just for you to consider. Deanna, what are you looking for before CPI today? Are you in a trade? People want to know if have you had some Asian success this later this night? Did you leave something open and have some huge wins? Or tell us. We're dying to know what happened. What is happening on your side?
I'm actually looking at the same or similar, very similar trade that you are looking at.
Really?
Yes, in the gold futures though. So same trade, but gold futures. I dabbled last night a little bit, but the market was pretty slow, especially in the S&P, but it was very choppy in gold as well. So not much to report from overnight trading. So I'll just see what I can get this morning. But yeah, with CPI coming up in 20 minutes, things could change really quickly, but that is the same. Basically, my profit target wouldn't be as far as yours, but as far as the setup goes, that's what I'm looking for.
Sure. We have colorful Marina saying hi to you, Deanna. Marina, colorful as always, and Vinicius as well. Our
Vinicius,
good friend.
Lewis.
Yes,
everybody's here this morning.
Yes, they are, and we are grateful for that. let's see. So would you want to show your charts to perhaps show us on the equities what are you looking for to perhaps not expecting, but what area would you be willing to trade this market? Or yeah.
Well, let's take a look at gold first, because we were kind of starting on gold, and then we'll move to the equities. But just like very similar to what you said, I'm looking at gold to the downside because we had this candle on Friday, which was very bearish. So basically, price came up, took out this very significant swing high, barely took out this swing high, and then failed from there, and failed quite dramatically. This is a pretty nasty candle. And then when the market opened this week, we got a really ugly gap down. So this is very bearish scenario. Follow through yesterday, right? Continued down all day yesterday. And then when price opened for the Tuesday session, it gapped down again, tried to get back above this is on the 4 hours, a swing low, tried to get back above and just couldn't make the progress. So now I'm just looking for, a move down. We could see something like what we've talked about before, where when you get a move below a previous day low, and then price starts to push higher, that could be a reversal. So this might not pan out to the downside. But given the close on Friday, given the nasty move yesterday, I am looking for a potential move further to the downside. So that's where I'm looking at on gold. Just so you can see this little pink line here, this is that swing low that we were talking about on stream yesterday, from the 4 hour down on the bottom here. So, like you said, not financial advice. This is just a probabilistic entry. And even the very best probabilistic entries, I'm not saying this is the best, but even the very best probabilistic entry can fail. Sometimes the market doesn't do what you want it to do. So, that's within my trade plan, and that could be a good potential trade. But like Victor said, 17 minutes to go till CPI, things could change very rapidly.
Yes, and if anyone is on the high stake account of the The5ers, which other would I be talking about? The The5ers, of course. There is a news trading restriction, 2 minutes before, 2 minutes after. You are restricted opening any trades, and that restriction will not. If you violate this restriction, it will not make you lose the account. But the profits, if you do get a profit, it will not count, but the losses do count. So it makes no sense whatsoever to enter a trade right there, because you're only taking risk without any benefits. So time your entry if you're looking to enter around that news. In general, I would advise to, either you're already way before the end, way before the release of the number, or do it sometime after those 2 minutes, either a few minutes or maybe even like an hour afterwards, whatever fits your trade plan. But in any case, not within that 4-minute window. What do you think of the background sound?
It's perfect now. It was kind of loud a little bit before, but now it's perfect.
Okay, perfect. If anything, we can adjust that. Just let us know in the chat, everyone, as well.
Sorry, Victor. Here's a great question for you. What if I hit TP during that duration, but I had entered earlier? That's a really, really great question. So if you're referring to a limit order where you take profit, then that is not affected, correct, Victor?
Yes. It's about the entries, whether that entry is a market order or a limit order being being triggered into opening a position. Both of them, doesn't matter what the method of what a kind of order it is, but the position should not be entered, should not be opened within that period. If you are already in the trade and you hit TP or stop loss, then it's of no consequence in terms of the the restriction. Restriction only applies for the entry.
So entry is
Very
during
simple.
those 4 minutes is what you want to avoid. 2 minutes before, 2 minutes after, but exiting with a limit order or stop loss, that's fine.
Yes, and even if you exit on manually, it's not the entry, so it's only the end. It's actually very, very simple. It's actually there to protect you, the trader, because our data tells us that that's for the vast majority of traders, it is not in your interest to open a position before that news, right? So it is to protect our capital from the prop firm, but as well as protect you, right? So that's how we roll. We are here our values, our interests is aligned with yours. So we want to keep you safe because that will automatically keep us safe as well.
All right. Well, let's
So-
take a look. Oh, sorry.
Yes.
Go ahead.
No, go ahead. I was gonna say we have a little less than 15 minutes, so it's kind of, as the time of the release gets closer, it kind of gets hot in here. The suspension is driving up, literally.
Yeah. To me, this is the time when it's like, when you're getting started, it's so tempting to be active before these huge news releases and try to position in a way that's going to, really be exciting if it works out in your favor. Of course, if it doesn't, not so great. But the flip side of that coin is you can just chill. Nothing's going to happen. There's the train isn't going to leave without us, at least a safe train. We only want to be on the safe trains, right? And so I think it's just time to chill. We have nothing to worry about for the next 13 minutes. We just need to wait, and maybe even further after that, depending on what happens. We just need to take it easy, relax, maybe come up with our plan ahead of time, and just sit and patiently wait. So after today's news release, there is nothing tomorrow as far as high impact news. And then Thursday, we have PPI as well. And then core retail sales on Friday and consumer sentiment on Friday. So the end of the week is going to be a little bit more news heavy, a little bit busier, but nothing going on tomorrow. So, I like news trading. Not necessarily trading the news, but I like when news events come in because they bring volatility in the market. So if you're looking at, this is the S&P futures, and on the S&P futures, looking at the daily, you can see we really haven't done anything since the market opened yesterday. Price is still within the range of the prior day's candle. So on Friday, we had this inside candle, right? So the high and the low are contained inside the prior day's action. And then yesterday, price popped up a little bit, but then dropped, pretty good lower. But so far, it's just stuck inside the prior day's action again. And if we take a look at the NASDAQ, we see the same thing, or similar, I should say. We didn't get that prior inside bar, but you can see today's price action is contained within Monday's price action. So the market's just kind of waiting, presumably for the news release coming out in 11 minutes now. And we just need to be patient along with it.
Someone asking here, Invisible Crouching Tiger, asking that this person is not very happy with news restriction, and we can understand that some people it might not be what you expected. But the thing is, the The5ers has a pooled account, right? The funded accounts are connected to the pooled account. So when you're funded with us, we are taking the risk, right? So it is there's actual consequences of losing, and we know from our data that trading with high leverage around this time is not in your interest, and that means also not in our interest. So we're trying to protect you, and but we have other programs as well. If this is something that you need for your strategy, if you thrive on trading around and during those minutes, then you are free to choose one of our other programs where you will be allowed to trade the news perfectly without any restriction. So when you're funded, it's not simulation, right? They are connected to the pooled account, so we're talking about real money, real exposure from the firm in the market. If that, and you can choose, as I said, any other program if that doesn't suit your style. Let's see, we have a couple of questions here. Akash, great member of our community as well. Yeah, Henry saying if you want to gamble, yes, that's exactly what we're referring to. We're not here as a prop firm. We're not here to gamble our way through in the market, and you shouldn't either. If that's why we have we're serious, responsible. We want to be responsible with the capital we manage. All right, so what else?
Let's take a look at Akash's comment here. I think this is a good point. It says, earlier I used to think news brings volatility. Now I've changed my perspective, and it's due to news that doesn't allow the market to move before it gets announced. I think this is a really good point. If I'm understanding correctly what he's saying, typically news does bring volatility, but the time before it, the hours even before it, it's almost like price stalls and waits for that volatility injection to come. So pre-news, it can be very, very slow. And then, once the news hits, it's not always, right? But CPI is in I like to think of it as a black folder news. So CPI, FOMC, and NFP, those are the really, really heavy hitters. Even more so than like PPI and other items that are marked as red folder news. But when you get the black folder news events, that's when you tend to see, like, at least I'm in the East Coast. So for me, the news is going to be at 8:30. Typically, when the market opens in the Asian, or even before the Asian session, for the news session, so a little more than 12 hours ago, oftentimes before CPI, FOMC, and NFP, you'll see nothing happen in that 12 to 14 hour window. So I agree, Akash, before the news, not really anything happening, but then typically we see a lot of volatility from there.
Yes, I do agree. There is a watchful and perhaps waiting stance from the market before the news. You'll see on the chart, we'll see the price tend to converge, right? Consolidate and even converge in a symmetrical triangle. Not perfect, but I mean, you tend to see that happen, and that's because the market participants. That's right before the news. That's the most dangerous part. That's the most unpredictable part of the trade, because you could be completely wrong, and it's going to be exactly from that moment that the impulse will be coming out when the news is released. So that's why you see they take a more conservative pose, and perhaps even retreat a little bit with their risk, and only after the news, the unknown, at least the market uncertainty about the result, or about what news to be released, the data that is released is out of the bottle, so to speak, then they can engage again with the market. So that's what you see, Akash, when you say it tends to not move. So that's why also right before the news, in terms of getting it's quite difficult to get in with a tight entry. If you're wide, it doesn't really matter that much. But if you're very tight, and when I'm getting in, my stops are normally quite tight. It does not make sense for me to get in right before the news. Either I'm already in with a trade from hours, if not days before, and I can leave some or all of that through the news, or I close part of all of it right before the news, or perhaps half an hour before, as it is retesting relevant structures. And if I'm going to, if I think that a move isn't over, and the, technically I can still see a price wanting to continue, and I think perhaps the news is going to be the catalyst, then I need to be aware and calculate, have an idea what the risk is to go through the news. If I cannot absorb that risk, best is to close it, or close part of it until it is at a tolerable level. That is the risk of the market going against you, and having perhaps some slippage, some or a lot of slippage sometimes, against you. You don't want that. You don't want to be in that position. And it's better to take a small win either before, or a partial win before the news, than to have a bigger than expected loss. That's never part of the plan. But if you don't watch out, it can happen during these black folder, as Deanna calls them, black folder, or rather than red folder. Folder events, and actually they are, because not everything on Forex Factory red, in the red folder category, not all of them are the same. Some of them are, you barely notice them when they come out, typically, and others makes the whole day is around that news, and sometimes even the day after. So it makes a difference knowing which of the red ones are really dangerous or high volatility. They're not dangerous, but I mean, if you don't know what you're doing, then of course that can explode in your face, for a lack of a better expression.
Well, and if you don't have a plan in place, right? So there's a question about how to handle over trading impulse after high impact news. I think trading over high impact, or not over, again, after high impact news can be a really great time to trade. If you are having an impulse to overtrade, though, or doing things that you don't want to do, it's possible that it is just too stimulating for you, and either you need to step away from your computer, or I find it really helpful to use a higher time frame. So you can see on my chart I have 1 hour, 4 hour, and daily, and I mainly only look at these two, hourly and daily, and that can really help calm you down, so that you're not paying attention to every wiggle and jiggle in the market. And another question real quick, Victor, before we move on, is how do you change gold to one to change the three windows? I think this is what you're asking. So if you have it open here, you can have your watch list, and you can click between whatever asset you want to look at. But then to make three windows, or however many, I think there's a limit of like 4, depending on your plan, or depends on what plan you have. But if you have a higher plan, you can choose how many windows and what layout orientation you want. So it's this little button right here.
Yes, that's useful tips for everyone who's using TradingView, and isn't that just about everyone?
I just met a trader who said he has never used TradingView, and I was like, I didn't even realize that was a thing. I thought everybody used TradingView. So it's possible, but I've only known one.
Yeah, it's you have for the retail traders, you have a period before and after TradingView, and that's how broadly accepted the TradingView is. I'm gonna switch since we are 30 seconds to the news, and I like your chart for calmness, and not seeing the what was it, the jiggle and wiggle of the market.
And the jiggles.
Yes, and I like that. Actually, when you say it, it makes me want to do exactly that.
Wiggle and jiggle.
Yeah, wiggle and jiggle a little bit. It makes me want to move a little bit, literally. But we have This Is Gold, and I think our viewers are, there you have, that's the movement. The market is going, just here, it was spiking up on this release just in time. We switched. We have EU as well moving. Market has a quite a big move to the upside. There we go. That's how much that is. That's a $12 jump right there to some structures we have indicated before. The question is this just a wick, just a spike, or is this something that's going to hold on and have a continuation, right? Because on the higher time frames, on the 4-hour, we can see that the market has been bearishly positioning itself bearishly the last couple of candles. You have even H2 order block right there within that H4, all of them telling us that the market wants to go lower, or at least tries to, and there's nothing to the left to stop that from happening. It hasn't changed. For example, we had a bullish order block right here, indicated right here, and the market just went through it like nothing. There we go. It went through that structure. Let's go to the lower time frames to see what are we thinking. Okay, so this setup, the setup I had before the news, by now it would have been a stop loss, and the next structure that we indicated would be this structure, right? If you can find, if I would be able to find, or if you can find a reason to short market from there, in my opinion, that makes sense. Right, at something perhaps putting your stop above that structure, because that would be the last line in the sand for price to the last structure for it to respect within the bearish price action we have had so far today. So if it breaks this, to me, that opens the door for obviously higher prices, but this could be that's going to hold price going forward. So we'll have to see how that plays out. Maybe we can I do have an alert right there, and that's I think we can take that off. Let's go to the 1 minute. That's right there. Market, I'm expecting, or I'm waiting for price to react, to first interact with this order block, and then we can look for perhaps some signs. If it doesn't convincingly tell us that it's actually reacting from this area, you do not want to go against a spike like this, right? If it doesn't convince us, doesn't show clear reversal signs, rejection of that structure, in my view, you have nothing to do shorting this. You want to be going on that side. And if you want to be going long, thinking this is a reversal, you want then wait for price to actually break this and then come back to take for that continuation, right? That's the move that you want to be taking. After, you could take it before as well, but that would be an extra aggressive trade, so to speak. Right, and obviously there is also another area that you could consider if it is on the higher time frames. Let's see on the 5. No, we don't have anything. So if price were to come back to anything similar to this structure, then you could be thinking of this. But if it's reversing from a structural point, then that's actually a bearish sign, meaning you do not want to go, even with this push up, you want to only do this if the market actually went higher than the area, right? So it actually broke the structure, or told you that it's going to break, by not being weak as it gets into this area. And then you start going long, looking for that demand area to go long. But as long as this area isn't taken out, I would expect, or I'll just watch, observe to see if this is just a push, grab for liquidity until we continue to the downside, right? Because you can see it right here. It's been not creating bullish areas on, maybe on the 15, this looks like a nice reaction, but on every other time frame, on the hourlies, it looks quite bearish. And when I see this, I want to be looking for a short, even while the move is to the upside. Look at that. That's a outside bar being retested on the H4. That's pretty bearish to me, and that's the trade that I would want to be taking, even while the spike is a bullish spike. Right. So this setup is would have been a stop. The next area is the structure above, which has H4 and H1 alignment.
Yeah, it's interesting, Victor, looking at, so I use ADX on the range bar charts to look at the movement in the S&P and gold, well, any asset I'm trading. And it's actually pretty interesting. It's pretty low on gold. So right now, the levels that I'm looking at, it's 14 and 16, so below that 20 threshold. And even on the S&P, the 16 range is above 20, but the other range has not quite reached it yet. So it is kind of interesting to see that on a CPI day, especially right after the news release, because there is a lot of volatility. But it seems like the market is still kind of, not quite where you would often see it. Whoops.
Are you okay?
Am I?
Yes.
Just knocking things over.
All right, so we are looking at the market is retracing that initial spike. To me, because it's reacted from that area, I would still be looking for that short. But we need to not ignore the fact that price action is still bullish, right? Price action is bullish from the release of the news, and that's significant. You should not be wanting to go be against that easily. Don't take it that lightly, because these moves from news are typically, they can break structures, even hourly structures, with quite ease, and easily do something like this: push and come back for a retracement, and then just continue to push. That makes a lot of sense, since that's in the direction of the initial spike. But we'll have to see. The fact that it did react to that area, though, to me is a reason to still not discard the decel setup completely. But I want to see, price needs to actually show us the money, show us it wants to go lower, because otherwise I'm not going to step in front of that freight train.
And that's exactly how, what you just said is exactly what I would think of as, how do you avoid impulsive over trading following the news? That's it, right? You have a plan, you have a setup, and you just try and take it easy a little bit.
Yes, let's take a look on EU as well. I have some alerts going off in the background. I hope you guys are not hearing that, because it is all right. We did have I did take a few losses earlier today when we were retesting this H4 order block. It squeezed, and in that squeeze, obviously, it took me out, and it did turn, which is what I was trying to capture. Only I was taken out before the turn actually happened. The turn happened with the news as the catalyst. And that's what I'm talking about, is this order block right here that got retested. It wasn't a very tight reversal, because as we can see, these wicks were quite squeezing that small order block by a lot. And when that happens, I'm going to be taken out, because I'm getting in very tightly in one of the structures to get these high risk reward ratios, and the price that I pay for that is lower win rate, because simply I'm easy to my stop loss being nearby is easy to get hit in the process, and that's something I have to accept if I want to have high risk reward ratios. Not that I want to have them, but that's how I have grown to be as a trader, where I thrive on that combination of low win rate and high risk reward ratio. I'm talking about on a day trade, maybe 5 to 8 or even 10, 1 to 5, 1 to 10, I mean. And if I'm holding a swing trade, that could be many multiples of 10s. But okay, let's go to the lower time frame to see if we have anything. This is quite nicely. This is how, nothing weird here. The initial spike, retracement, and then the continuation, probably for higher prices. That looks pretty plain vanilla in terms of the area we have. And too bad, it's a little bit of a shame it it had this price action before the news, because otherwise I would be holding a nice a bag of profits by now. But hey, that's how it is. It's okay, no biggie. We live in trade another time. Nothing too serious happening here. In the meantime, we can eliminate this order block, because it's clearly this is not what price is holding or containing price in any way. Let's see, on the H4, we do have a daily order block that is still, look at that, still active, still fresh. So if price comes back within, I don't have any order, this is no longer fresh to trade from. And basically, we don't have any, I don't have a trade anymore to go to trade on this pair. We would have, but it would be the ignition order block from this news, and it seems like it's already left that way behind. And who knows, we'll see that in the future. But I don't see anything here, at least for my style of trading, to participate in. And on gold, let's visit that again. We don't have the same continuation on gold, bullish continuation, I mean. So I'm still watchful to see how it will behave, right? I want to see it come back to this area and maybe, just maybe, reject it. And when it needs to do it first, and then I will look to see if there's an opportunity for me to get in. I'm not going to get in just because that's not how I know how to trade. So I will just wait my turn. If it gives me green light, then we can for sure take that. Obviously, this order block has been taken out, and there isn't a reason for me to trade that. We still have that order block that I'm trying to catch a move to the downside from. On the H2, we don't have anything except that area. On the 5 minute, let's see if we have something on the 1 minute. This is at all not present. There is no quasi here. Right? We need to read price action and only enter if price action is actually bearish. It's not. It's bullish, right? So I'm in no hurry, and I don't want to go long this because that's not how I trade. I need to have the structures supporting my idea. I'm not going to go against that.
Mm-hmm.
Yeah. So it's either they are in the same direction, or I'm just not. It's not my trade.
Mm-hmm. Yeah, that's what I'm seeing in gold too. I still think overall, big picture, maybe not big picture, but like it has been strongly bearish this week and Friday as well. But even when that happens, there's always these like returns. It's like a wave, right? A return to some level, and it remains to be seen if this is going to be a change in that wave, right? Or right now, as price is moving higher, the ADX continues to be very low, actually quite low, and falling. So it's possible that this is just how the wave goes and then it falls, and it might be like that, and then we'll see continuation to the downside. But since we don't know that, it's best to wait and let the price action tell us what's going to happen. And for right now, it's not really doing a whole lot of activity, so we just need to be patient.
What do we have on the sides of the equities? Do we have some insights as to how they're behaving after this news?
I think my screen got taken off, so let me got disconnected.
No problem.
Disconnected
again. No problem. I'll put mine again. In the meantime, let me know when you're ready.
I've got it. All right. So right now in the equities, looking at the S&P, we had this huge push up. Price came above that previous day high. That's this pink level marked here. And it's kind of, like taking a little breath and chilling out for a second, but still above that previous day high. So far, I like what we see here as far as, a big push higher. Now, if it starts to drop below this previous day high, and, especially if it starts hanging out below, that's definitely going to be something that I'm going to pay attention to. But right now, we've got a big burst up and just waiting to see what price does here. Am I scared? Yeah. I don't know what happened to all my lines and markings on here, but for some reason they're not on there. So anyway, this is the level that I'm looking at, yesterday's high. And if we look at the NASDAQ, you can see it's similar. It popped above the previous day high, but has already fallen back below. So this to me is kind of like, really paying attention to this. If it continues to stay below this previous day high, that is not a good sign, in my opinion. So I will be watching that carefully. I'm trading the S&P specifically today, not the NASDAQ, and the NASDAQ is still above. Oh, there all my drawings came back. So still above on the S&P, but we know that we talked yesterday that the NASDAQ has been tending to lead the two indices. The NASDAQ has tended to be, the leader. And right now it's leading below the previous day high. So need to keep a close eye on things here.
Yes, indeed. We have some on the, let's see if I have something to, we had a, actually earlier I had a trade on GU. I actually forgot about it. It's okay because it hit before I came on. It had already hit EP. So, but I will show that later on. We have some nice movement on GU as well. Obviously, it's going to be the same as on EU. It's to the upside. We have the same. Let me change the scene so people can see what we are seeing, or at least what I'm seeing here on the screen. Let's wait for that to kick in. No, it hasn't kicked in yet. There you go. Okay, so on the H4, this is the trade. That was the trade that I took earlier. We had a on H4, right? We had the H4 right there, and this is visible on the H2 as well. It wasn't invalidated there. On the 1 minute, it was an H2 actually. H2 overlap that we had, and on the, I believe it was on the 3 or was it on the 2? There it is. It was a 2 minutes. Came back. We had a quasi right here. This would be the left shoulder that had the neckline right there, and it took it out, came back, and had a reaction from that and moves away from it. You can see once it gets it reacts to these structures, not always, but once you have the actual entries, it's gonna move, quite swiftly in your direction, and that's why I prefer to have this isn't tight at all, but normally I would have something below this area. In this case, I wasn't able to, but something below that area, the entry area, where you can get in and move and be out of it very quickly if the market is against you and does not react to the order block that I intend to trade from. But once it does react, usually even if there's a wick, it comes back and moves in the opposite direction with strength. And I got out. This was before this was this morning. Let's switch to gold in the meantime. How is gold looking? Are we getting the?
Well, so gold has turned rather bullish. So we're back above the, it's still low on the ADX. So like I said, look at the ADX, but price is above the previous day low and also trying to recover. It is slightly above right now. That prior swing low that was important yesterday from the 4-hour. So the 4-hour swing low was something that we talked about a lot yesterday. It had dropped below, and then it spent pretty much all day yesterday consolidating around that level. So price wicked below and is pushing higher. So now definitely it's starting to look, like we said before the news, you never know, it could look totally different once the news comes out. And in fact, it does look totally different. It is now looking rather bullish. having taken out the previous day low and pushing strongly higher. So we'll see if it can get above this like messy little consolidation area and get some legs and continue on.
Yes, indeed. And we are retesting the area that I was talking about on gold. So I will switch to mine ever so swiftly. And we have an not an H, a 5-minute entry order block here. But I want to see with this big candle, it's very difficult for me to get a short or indication that the shorts are coming in. It is having a reaction, but in relative to the move to this big candle, it's very difficult for it to be a short sign. So the market is reacting to that structure. For those who are wondering, the neckline is actually the lowest point here. So that would be the neckline. It took the neckline out. This is the lowest point from the structure, so that would be the initial target as well if we do get a reaction. But keep in mind, this is against the direction of the spike. That already you do not want to do that unless you get really strong confluence in indications and confirmations that the market is actually reacting from a relevant area. So that's on gold. Let's see if this would be the initial TP. If I were to have something on the day as a day trade, and the rest I would then leave to run for the rest of the move, since there isn't anything on the left on the higher time frame to stop price. So let's see, we have on the 1 minute, someone, Raj, took your recommendation.
I'm so glad to hear that, Raj. Thanks for reporting back.
Yes.
I love that series. It's so great.
It is. It's quite in-depth towards the different ways to approach this very basic, right? The concept is very simple and basic, but in application, there's many ways you can approach it, and having a systematic way as it is presented in Gail's presentation is truly helpful for everyone.
Absolutely.
Right. So we did get go ahead. Sorry.
So question here, if NASDAQ is going to make a new higher high, and I that's a good question. I wish I knew the answer. I wish it was possible to tell. It's impossible to know. It could. We're not very far from a higher high, so I would expect that could happen, and higher high, but also more to the point, it's an all-time high. But we never know when that's going to happen. It could happen today, and it very well could not happen today. We just don't know. So I try to, as hard as it is, I try to keep away from trying to predict whether or not it's going to be an all-time high, and just pay attention to current price action. So like we said, price popped above this previous day high right here. This is yesterday's high, and that's this pink line here. Above, but hasn't been able to stay above. It looks a little bit better on the S&P, where price has popped above that previous day high and has stayed above it. So S&P is quite a bit further from the all-time high compared to the NASDAQ. The NASDAQ has been the stronger asset, but we definitely want to see it get above and stay above the previous day high, and we don't have that yet, although it seems like it's making another push. So too early to tell. We don't know until it happens. We can't, you can try to predict, but that tends to cause problems predicting what is going to happen versus reacting to what is happening. And right now, again, below that previous day high on the NASDAQ, the S&P is above the previous day high and looks to be gaining strength, but it's impossible to know for sure. We're just trading price action as it is at the moment, rather than trying to predict. Unless, Victor, do you want to put in a prediction? What is your prediction?
I predict that in the next 30 seconds, No, I don't do that.
I mean, it's very likely that it's going to make this has been very, very bullish price action. This is all I can really say about this, and I think is pretty much all anyone can say is this has been really bullish price action, right? We've seen a really strong push off this. We had this like little triangle here, price came up, took a nasty spill, and then again, really strong price action higher. But it's unpredictable in the specifics, right? It goes up, it goes down, up, down. You know, we're trading probabilistically. We don't actually know what's going to happen. Nobody
Exactly.
does, and so that's really important to keep in mind. Looking at the probabilities, if price stays above previous day high, probability is we will see some upside. It's not a guarantee. If price starts to come down below this previous day high and especially hangs out here, probabilities change to the downside. So to me, this is the line in the sand that I'm really watching. And, you know, like I said, the NASDAQ is still below that level. So it's a little bit more precarious on the NASDAQ, and they typically go together. So if the NASDAQ really starts rolling over, I would expect the S&P to follow. If, on the other hand, the NASDAQ starts pushing higher and starts getting above this level, then, you know, it seems like ES is leading the way for the day.
Indeed, I can, you know, just for entertainment sakes, I can, I could take a short from NAS right here, where current levels are, and putting a stop above 23,740 on the CFD price. Maybe I should put my screen on, and let's take this. Right, I would take if this would make sense to me, although it doesn't have, you know, I didn't get a signal, didn't go to the minutes, get my quasi and all those you know, criteria that needs to be fulfilled before I get in. But this makes sense to me to enter in relation to this structure. Why do I say that? On the daily time frame, we do have a fresh order block that's being retested. Yes, it is bullish. Yes, it's more likely to go up. I agree. Fact is, this, if it is going to reverse, right, and have some kind of a reversal, this is the best place to get in. Why? Because you're so close to the invalidation of that structure. So I think it's going to go up, but because of the odds, right, because of the risk reward ratio, and because I can minimize, define my risk very tight, I would take this trade any day of the week. And even knowing that, you know, it might only have like 10% chance of occurring, I know that the risk reward will be much greater than 1 to 10. So why do I say this? And if you have even if it's 10% chance, but you can have something like 1 to 15, 1 to 20, that's a profitable setup right there. And still doesn't mean you're only gonna get 1 in every 10. But it still makes sense from a trade perspective to profitability perspective to trade that. That's the daily. Let's see on the weekly. Do we have anything? Actually, we have on the weekly as well. Look at that weekly order block right there that's being retested right now. So it makes sense even on the weekly. That's a very contrarian trade. And the daily, we are within that order block. On the H4, we can find a quasi right here. Right, this would be the quasi. Yes, that would be the quasi. And look at this. Right, so we have the entry or the neckline right there. And what do we have there? Very beautiful. One order block above the. Actually, I didn't put it in. Do we have multiple order blocks? We only have one above the 50% retracement from that leg, and it's this order block right here. So if you go to the lower time frames, what we are currently playing with that structure. Not only playing with it, we already interacted with it before, and this is the area we could just a possibility. We don't know the future, obviously. So this is the area that I would easily be able to take this short, have it right here, maybe put some margin onto it, and just target. Imagine, right? Take into account that if this is going to react, you know, we could have a reaction from the actual order block here, or perhaps even from the weekly, right? So if that were to be the case, my FTA would be not the Food and Drug Administration, but the first trouble area would be at least this place. And this is 1 to 5. It isn't what I just mentioned, but the reason is because I didn't catch the quasi, right? If I were to catch the quasi, we can fine tune this much tighter. You don't have to, if you're getting in on a quasi, I can have this as tight as just a couple of pips basically. But on the where would I put my targets, right? You can have on the daily time frame, and that would be my one of the targets. And if you're taking into account that there's also a weekly there, then this could fall quite some before I get a weekly structure to stop it. It's all gonna. I'm moving the not the right structure here. This is the weekly. What I wanted to move was the this. All right, so let's do that. Thank you for your patience, all viewers. On the weekly time frame. So let's see. It's not visible. Okay, so that would be. There you go. Obviously, you're not going to be holding this the whole position on for this structure. You might as well, since this is quite ambitious, and I don't have a lot. You could be just trailing it, maybe something like that, and that gives 1 to 23, and that's what I meant. You can, even if this is 10% a chance, a probability of this happening. With a risk-reward ratio that is way above 1 to 10, this could be a profitable trade, or it is interesting in any case, while being just 10% chance of happening. Right. This is the where I was telling to my entry could be right above, actually right a little bit lower, something like that. It's not a prediction, but it is something I could. I do see as a possible entry. On gold, let's look at the area I just talked about. It's about this area, right? This area where I talked about, this is where we could check to see if price is reacting and rejecting from. And how do we know that? It's by creating structures, bearish structures. And these bearish structures, what they're telling us, look at that. That's a nice bearish pin bar and possibly closing in 12 minutes. We'll have to wait for it to close yet, but if it does close as an engulfing, that could be a very nice indication that the market is has rejected that area, and there has a good chance of continuing that in that direction. I don't see it yet. To be fair, this is the neckline on this structure. So if you're considering reading price action, right from this area, it needs to break this first. Hasn't done that. As long as it doesn't do that, I have no reason to be in this short, and it has all the reasons to continue higher. Right, so you're always, playing with the two scenarios. Right, it's going to be a bullish move, a bearish move. Obviously, it can go also sideways, but if you zoom in, you will find these bearish and bullish legs, within the fluctuations, and you wanna. Those are the two directions, right? They're can only go up and down, and it's not that complex.
And we have the open again. Somebody mentioned in the chat waiting for the open. So right now, price is kind of stalled on the S&P, and is back below that day high that we talked about.
Mm-hmm.
So will be interesting to continue to watch and see what happens here, but it is possible we get a little bit of a move lower.
You mean liquidity sweep from those swing points?
Yeah, it's possible, just because we are back again below that previous day high.
Mm-hmm.
Same as what we've been seeing on the NASDAQ, but now the S&P is also below the previous day high. And gold is started a little bit of a push to the downside, but really it's interesting. Price action is pretty slow across the board here. So maybe it is the open that we need to be waiting for. It just depends on, what you're seeing, but really not seeing a whole lot of volatility, at least in gold especially. but the Nasdaq and the S&P either.
Gold is looking bullish since the news. Price action on the lower time frames, on the minutes, is definitely still bullish. It's not trying to reverse, although it did have a reaction. It did have the reaction on this area, as we indicated, right? It did have the reaction on this area. And the reaction, I mean, that moved down. However, if you look at price action, not breaking the neckline, not only that, if you look for other time frame as well, what you can see is that, let's see, where did I see it? Yes, you can see it how it creates bullish structures here. Come back, retest the bullish structure, and if it continues to move away from that structure, that 3-minute order block, right? That's how market continue. That's the continuation in progress. It's still possible, but it needs to break these structures and start creating bearish ones, and especially create invalidate, or not invalidate, but activate the quasi by breaking that neckline. It hasn't happened yet, so there's a lot of things gold needs to do in terms of price action before I get interested in shorting this.
Yeah, that's kind of my read on gold as well. Mainly that just a whole lot isn't happening yet. We need some of the speed to get behind the move, so that volatility creates the price movement that we require in order to capture anything. If price isn't moving, you can't make money.
That's absolutely right. Do we know the time, the date and the time that the two leaders will be meeting this week?
I saw it. I just closed my Forex factory. It's
I don't see it anywhere.
I saw
maybe
it somewhere. Where did I see it?
Monday there was a Trump speech, but obviously that I don't think that was it hasn't happened yet. So
it's the one with Putin, right? I saw that somewhere.
Okay.
Let me see if I can find it. I can't remember where I saw it.
No problem. In the meantime, maybe someone in the chat can guide us, can help us. I was just wondering, since I only need to know when these things happen to take them into account. I'm not going to take a trade based on my expectation of the outcome of these sessions. Coming back to gold, we see the reaction of this structure of this area is having some continued pressure, selling pressure from the market. But as I said, you still have this order block right here that is supporting price to keep on going higher. So I'm not too concerned with this. This could be just a buying opportunity for price to continue higher. That's not what I'm waiting for. What I'm waiting for is market to either break that, or maybe on the 15, on the 30 minutes, start creating bearish structures like we almost have that in 6 minutes. This would be a 15-minute bearish order block, right? And that could be the beginning, perhaps, of market indicating that we might be going lower again. If that were to be the case in 6 minutes and 16 seconds, then we can start building our case for a possible short again on gold after the initial setup was taken out by the news.
I don't trade Euro USD. I trade mostly the S&P and also gold. Oh, Friday is. Hakeem is saying Friday is. And yeah, so it looks like Friday. It's not on Forex Factory. Where did you see it? Putin. Yeah, here we go. Time has not been confirmed. Okay, maybe this is why it's not on Forex Factory, because the time hasn't been confirmed yet.
Yeah. Okay.
Everybody's saying
Friday. That makes sense. Because of course we would see leading up to the meeting, during the meeting, and certainly after the meeting, we should be expecting some kind of movement, either disappointment or the expectation running high at the beginning, or not to the charts, not a prediction, not a price prediction, but what would you expect? Do you think we're gonna get some resolution, some advancement in the conflicts, and some solutions to the problems, or do you think it's more of the same meeting but no great change in policies?
Are you asking me or asking the
Yes.
chat? I have no expectations whatsoever. I'm going to
Okay.
trade price and price action as it comes, but
Yeah.
I make it a point to not have any expectations whatsoever. I'm a purely technical trader, and
Mm-hmm.
so I only concern myself. I mean, I pay attention obviously when news releases are coming or big news events are coming, and might modify my size or something like that. But I am not. I only trade technical, so I don't include that in my analysis at all.
Yes, indeed. Perfect. That's a very good answer. How about you as a non-trader, like not pertaining to your trading decisions? Do you have any reading? Have you noticed that most of these meetings with world leaders and Trump, you have noticed anything? Have you?
Well, Trump is great for volatility. Obviously, like a lot of traders will say that they love having Trump as president, not for any reason related to politics, but just because he tends to bring so much volatility to the market. But it's a fine line between having ideas on the side and not letting it impact my trading. I don't want to there's no benefit to me to predicting what's going to happen. I just pay attention to when it happens, and react to it. So even personally on the side, I know Trump is good for volatility. As far as what's going to happen, I mean, nobody has been able to accurately predict, how these events with Trump are going to, or at least I haven't seen it. I know LJ is really good at macro analysis, but as far as consistency, for me, it's better just to kind of like keep my blinders on and trade what I see without thinking about it even on the side. I don't want it to be a part of what I do at all.
Perfect. I like that. How you defend your impartiality in terms of your trading decisions going forward. I like that. I think you understand where your edge comes from, and you don't want to mess with that. You don't want to, and that's I can entertain opinions, but they actually hold no value for my trading, because I'm not going to use them one way or the other. That I didn't backtest that, so why should I use them in my
Right.
trading? I'd only want to be using rules and conditions and filters and the things that I have data on, and I don't have data on what I'm asking you. So perfect answer, Deanna. We have on the 1 minute. We did break the neckline for those who are interested in the Quasimodo. If you're watching a Disney Channel and you're watching the character, then this is your place to be. We're gonna be talking about Quasimodo, ringing that bell of Notre Dame. No, we are on the 5 minute, on the not on the 2, not on the 3. It's only on the 1 minute, so it's not a huge. It doesn't have multiple time frame telling us that this could be the areas, but I'm interested in these two areas, right? This one, not this one. Let me take that away. And if price comes back, we could be looking for a short. Either you put your stop there and target what I just said, right, all the way down. Whatever your patience allow you to hold the trade for the duration. This is the idea. Let's say on the H4, did my H4 change? Not at all. I still think this is a short. I was before the news. The news did invalidate the previous setup. It still looks like a short. I have no reason. Look at that order flow. That's as short as actually we have in 45 minutes. I could have another entry in here, a bit lower or a bit higher, I should say, than we're currently at. But that doesn't matter. The targets are way lower. So even if I get in here, I still can get a very decent risk reward ratio. We'll see how it plays out on the 1 minute. Let's take a look. That could be
And Victor,
something.
I'm curious to know. I think using a lower win rate with a higher risk reward is a method preferred by some traders. Do you think it's would you agree that that is a little bit harder, especially for newer traders to
Yes.
be accustomed to?
Yes.
Because these are like big sexy gains that you're getting, huge R numbers, and that's great. But it can be really hard when you're newly starting out to obviously you want to have high win rate and high R multiples, and that doesn't happen. So you have to kind of choose, like, pick your balance, right? And for a lot of newer traders, I think Victor's style might be one to aspire to, but it is very difficult to do that, to accept that you're going to be wrong over and over and over again. And Victor is very strong in his data and knows what to expect. But if you're not at that point, it's okay to get smaller R's where you win more often. Would you agree, Victor?
Totally. The way I trade, and for multiple reasons, I say to not consider, to not think about, and even though I cannot stop people at home watching me, trying to copy, the entries or the setups, it's for multiple reasons why you shouldn't be doing that. One of is that we want to, not teach you, but guide you in the ways we trade by exposing you to our thoughts and considerations while we build and trade our setups. But the other one is that I didn't start doing these trades until years passed, and in the meantime I tried to find my identity as the trader. What is comfortable for me? What can I do? There even though I am comfortable doing this now, there are many things that I'm not comfortable at, and they're not suitable for me. And this is suitable for me because I've done this. I've had plenty of profits to be chill. Even if drawdown periods happen, it's okay. I've seen it. I have the data. I can withstand just about anything. But if you haven't gone through that process, it's going to be very difficult, very difficult to keep calm in a losing streak, or hold that trade that's 10R in profit, hold that to the next 10R. Not going to happen unless you've been through the process, because there's a sort of a maturation process for this specific type of trading. So what can I say? It's not suitable for everyone, and actually it's I would say it's not suitable for the majority of traders, because low win rate is trading in itself is already hard on your psychology, on your emotions, and your stress level, and trading high risk reward ratio is even more. So it's an uncomfortable position to be in, and it's something I think the majority of people are not going to be okay with.
Yeah, I agree. And again, you can make things work with a high win rate and a low R multiple, as well as a low win rate and a high R multiple. So it's really depends on where you find your comfort level over time, and especially depends on your system. Oh, I don't know why I am zoomed in like that. Sorry about that. Or maybe it just dropped. Okay, here we go. But when you're starting out, I think specifically when you're starting out, that is a time to know that it's okay to just take profit really quickly, as long as your your win rate is high enough, which they are inversely correlated. And then if you find that you prefer these longer targets, you can switch to that over time.
Yes,
especially
definitely.
like you said, if your system supports that.
I found this way just by testing all kinds of profiles, meaning, what if I have a very wide stop? What if I try tighter stops? What happens if I have lax entry criteria? What if I do it more strict? And just by juggling, wiggle and jiggle, as you say, all these kinds of parameters and trying out different values, basically optimizing the system, the concept didn't change, the idea, the alignment didn't change, but the rules by which I need to follow, by which I trade, I'm we as the architect of our system, we can make them stricter, more stringent, or more lenient, for flexible. There are ways you can change this, and every change we do potentially has a change on the equity curve. And I check the rules, that I made them as simple as possible, so as objective as possible. And the rules, the highest profitability I got was following this way, which is low win rate but a high risk reward ratio. And but that's not the only way. You can design this to be negative risk reward ratio, negative risk reward ratio, and have, I don't know, 70-80% win rate, and you could have a upward slope equity curve as well.
Right.
It's up to the trader to decide what are they more likely, what is better for them, because in the negative case, you will have one big loss, or it will be infrequent, but when it happens, it will be much bigger than your average win. Is that, how do you handle that well? Is that perhaps catastrophic for your levels of tilt level? Or are you okay with that, and you prefer having consistency, at profitable days one after another, and just once in a while having a big loss? Or the other way around, where it is, I take many losses during a day, and but my winners are much bigger. Will that, perhaps for some people, that could push their tilt button? They get greedy, they want to do it again, but it doesn't work like that.
Right.
I want to get into the next trade, they put on I don't know, bigger size, or they try it again, they take a second hit. It's very the opportunity window is very precise. And with these trades, with our high risk reward ratios, the only way to get them, if you have a very well thought out and validated system. Otherwise, you're never going to get it randomly plugging trades in. That's not going to happen. You're only going to burn your account through 1,000 cuts.
Right.
So but it's finding what is comfortable for you as the trader, having bigger losses or frequent losses, basically.
And also what account you're trading, right? Like the way you trade your personal account very likely could be different than the way you trade a funded account, because it's just different, right? The requirements are different, the parameters are different. A smoother equity curve can be not only psychologically beneficial, but a lot of times for a funding challenge that might be beneficial. Or or it could be like Victor's saying, if you can keep really small risk but you lose a ton, and then you have this huge explosion of your equity curve to the upside, that could be a really beneficial way to do a funding challenge as well. So it just really depends on who you are as a person, what you prefer, and then also what are the goals of whatever account that you're trading.
Yes, and that's exactly what I do. I have a low win rate, high risk reward ratio, but a low risk per trade. Very, very low risk per trade. So I take many losses, one after each other, sometimes, a lot of times on the same day. But since the losses per trade are very small, it doesn't hurt me. It's okay. It's fine. I see my account go a little bit lower. And either at the end of the day, I might have a bigger move and it wins everything I lost plus a little bit, or I might have an actual big winner and it will make up for days of sometimes even longer, more than weeks of possibly losing days. So that's uh, I'm comfortable trading this way because I've
Yeah.
done it so long, but it's not for everyone.
And it's also, I think, largely that you know exactly what you're working with, right? When you mix that the win rates, it can be a little bit more confusing to know, okay, is this a scenario where I'm expecting, what am I expecting as far as win rate? And if you keep it consistent, then you can get a really good idea of how your back test, if you do a back test, how it compares to your live trading or your forward testing. So that you can understand, how aligned are they? Does my back test actually reflect the market conditions? That's important too, to make sure that you're seeing alignment there.
For sure. And what is the variability of your equity curves? That's one thing that we I don't hear that many times being discussed. You can have a strategy and how to minimize the variability of your equity curve. What I mean by that is, look at the equity curve depending on per block of 20 trades or perhaps 100 trades, depending on your trade frequency, and see how they all look the same or how different they look when you compare one to one, right? That's the variability of the equity curve. That's a parameter, or that's a metric that is so relevant for when you model your risk system, right? Your risk management, I mean, because if you based it on one or two equity curves from a couple of, or maybe a few equity curves from those blocks, right? Blocks of 10 or 100 or 50 trades, and they can also be grouped by month or perhaps by quarter, whatever is suitable for each one of our traders. If you base your risk management on those equity curves you have, but the variability of your equity curves is very large, what's going to happen? You're probably going to hit your it's going to exceed what you've measured, because there's a big variability, and that's something we need to take into account as well.
We have less than 3 minutes until the open, and it has been rather sleepy in the indices still. So we're just kind of, like we talked about before, still sitting below the previous day high, both on the S&P and the NASDAQ. So before, we were price was below the previous day high only on the NASDAQ, had popped above and then dipped below. We're seeing that same thing now in the S&P as well. So it had dipped above, kind of hung out there for a bit, and now below the previous day high, but a minute and a half to go until we get the open. So the question is price going to stay below this previous day high and start to work maybe lower, or if we'll get a pop above? And gold, also super sleepy. We're still stuck in that little range, more or less. This was the 4-hour swing low that we talked about yesterday, and price cannot move away from it. It's just stuck there in this little range. So question is, will gold, break out one way or another? We'll see. Maybe the open will give us a little bit more clarity on how things are going to go today.
Yeah, I'm going to switch back to mine with your permission, Deanna. What we're looking for is this is gold on zoomed in on the lower time frame. This is the 1 minute. That's the initial spike of the news. That's CPI. And we had the reaction we were looking for, right? We had a reaction, which is this: as price came into the area we talked about, right? This area, price did react away from it. However, that's not enough, right? It's not only the reaction, because the reaction is a high probability thing when you have these structures. But for me to get in, I need it to react to specific levels. We had a reaction right here. This is a beautiful reaction. Let's take a look at that. Entry order block. See how price comes and touches it and moves away. I like to see that. Touches it and moves away. But that's not enough for me. I need to see price get into that area, and actually I want to see selling pressure coming to the market, and only then, only when it shows us the money, then I would be considering an entry or in the next area. And so if it doesn't do that, I'm not going to burn my finger and just opening trades because it's at that level. I want to see price actually react, the selling pressure coming in and taking over. And that's not happening yet. Selling, I said, because so far, remember the news was we had so far a bullish reaction from the news. So given the momentum, this is likely to happen, right? Continuation in the direction of the news. So it's you want to be certain whenever you go against this move, you have to be quite certain that you're actually trading substantial indication and not just a flimsy trade right there. We have some alerts coming out on the EU. Let's take a look on that. We have a switch on EU switch. I say switch because earlier I was looking for a possible short on EU, and I'll show you guys what I mean. This is the euro, right? The bearish not bearish, fresh order block on the 4 hour, and that 4 hour fresh order block has been invalidated by this close. So basically, there's no reason for me to looking for that short anymore, not from these areas, and I don't have anything above. And actually, it closed as a bullish. So now it switches, right? Within what? An hour, 2 hours, I'm switching my direction of the where I'm looking for. I was looking for a short. I'm looking now for a long on EU. This is the reason that I'm looking for that long. On the H2, let's see, we have a H2 order block right here. Let's see on the H1, do we have something? Actually, we do. I prefer this H1 because it is more to the extreme. There we go. And then I'm gonna go to the lower time frames to find a possible entry and see if I can find, this would be the neckline. I enter always with a quasi, as in my case, and I'm looking for, you can see it from a mile away. There's a very nice order block. This is on the 15-minute here, 15-minute entry order block on the quasi. Is it gonna, ring the bells of the cathedral or not? We'll have to see in a couple of minutes. But I will be waiting there. If I hear the bell, I'll let you guys know. And this is on the 5-minute. Let's see, that was on the 15-minute, and this is on the 5. The 5 has an overlap area. Maybe it will reverse before it gets there, or maybe not. We'll see. I have no idea. I don't. The same way as Deanna does not predict very, very strictly, does not do any prediction. I do not know if price will get here, and I'm only interested if it gets there. But before that, I have nothing. It's none of my business, taking trades up here, only where it is according to the plan needs to be done. So I'm going to be strict with that, as always, and I'm going to be looking for that reaction if it happens, and take a trade from there. Let's see, we have 2 areas. We have one on this is the 2-minute as well, and we have another one here. I know you might not see all of them, but that's how I know to be consistently profitable. It's by having these area well defined and waiting for price, like a sniper, waiting for the target to actually be in the right position before pulling the trigger. And you could be waiting there all day and perhaps all night, and your target may not come in your viewfinder, and you might not pull the trigger, and that's fine. But that's how I do it. So I'm waiting for price to come back into this area, and only then I'm interested to take the shot. Let's mark that with some nice yellow lines. And I'm looking for a long from these areas. and we'll patiently waiting there. Now I'm playing that push up, obviously, from the area, from that order block, and we have some structures to the left that I would have used for targets initially, but now that they're already touched, basically this would be the next structure that I see. I'll have to double check that with other time frames, but yes, that would be the FDA. In this case, it would be this order block. If you're not too comfortable with that, you can still use that as the target, but only if it gets there, and otherwise I wouldn't do it. How is gold faring? Let's see on the 1 minute. Did it come back to the structure or the entry order block? It did, and is playing with that order block, that entry order block, and depending on your structures, depending on your confirmations, it may or may not triggering you in the trade. We'll have to see that. On the 2 minute, it does look quite nice there, and actually on the 3 minute does not. The 5 minute actually it does. It is starting to look nice there. What about you, Deanna? Are you seeing something on perhaps the equities or?
Mhm. Yeah, so right now, still X is super low in gold, so I'm not really interested in gold at all. But I am looking at the Nasdaq and the S&P. So looking at the S&P, price is now back above that previous day high. Question is, will it stay above the previous day high and continue to advance, or is this just a temporary pop above? So I'm looking at that in the S&P, and then also the same thing on the Nasdaq, watching that previous day high has not quite gotten there yet. So no confirmation from the Nasdaq yet. Only the S&P is back above. Remember, initially the S&P was above, the Nasdaq was below, and then prior to the open, both were both were below. And now we have inconsistency again. S&P is above, Nasdaq is below, but Nasdaq has been leading the charge recently. So we need a little bit more time and a little bit more clarification if price is going to be able to maintain this level here and push higher. But the ADX is looking much better, starting to pick up for the S&P. Still super quiet in gold though.
Yes, that is. It hasn't really kind of broken loose of any direction. It is. It can still, it hasn't. I'm gonna show my chart for those who are wondering what I'm talking about. You have the. Let's zoom in, perhaps on the 5 minute. This is the move that was created by the news. That move, even though it's being retraced, it hasn't been negated yet, right? While it's not negated, it's still a great move for continuation, right? Price comes all the way back to the initial structure where that impulsive move started. Happens a lot of the time, so do not discard the bullishness in the momentum in the initial spike yet. But once it breaks and gets below this area, everyone who bought into this impulse would be feeling pain. And that means that it can very quickly, if it does not hold this order block, right? If it does not, let me mark that, if it doesn't have the reaction, defend this, even if it squeezes it by a little bit, if it does not react, the buyers do not defend this area, what will happen is a quick push down, because everyone, or so it will seem, will get the memo that we're going down. So if that were to happen, these areas for entries, you would be, and that's why I like to trade the quasi one. On one side, it looks dangerous because I'm going, since it's a reversal, I'm going against the current trend, right? In this case, the current momentum even. However, if I'm wrong, I'm gonna be wrong very quickly and gonna be stopped out. But if I'm right, I get in at the best price before it actually becomes evident for everyone that we're going down. And by the time it becomes evident, I'm in fat profit. I can sit counting dollar bills. Not really. I'm just kidding. I can sit relaxed and see, even if it tries to, fake a breakdown, come back, and that would be very stressful for everyone, because if you're trying to buy the breakout, in this case, the breakdown, you'd be, between profit and loss for some time. It might even react, and then later on go down, right? Imagine that. That's gonna be, it's a roller coaster, emotional roller coaster. But with the quasis, this is where you want to be. These areas are the ones you want to be getting in, and it's very quick. You're gonna be wrong, or you're gonna be comfortably right. And I like to have. I know myself. I want to be comfortable, because I can hold the trades all the way down. I can wait for that 20R, 15R, 10R much easier. But if I see it, fluctuating around zero, that's not easy.
Yeah, absolutely.
All right. So the area, in hindsight,
Ooh.
obviously, the area in hindsight, what is it? Akash passed the challenge this week. Wow.
Mhm.
Congratulations. That
How
is
exciting.
amazing. Amazing news, Akash. We're happy for you. And these great stuff. We like, how do we stop these balloons?
I like them. Just leave them. That's a happy way to do our Tuesday. We'll just celebrate Akash until the end.
Okay, they stop by themselves, so it does take a couple of seconds. I was worrying we would be seeing balloons the rest of the stream. Imagine that. All right,
That's
so
so exciting.
yes, it is. I mean, I have to say though, it's ambivalent, or one side wants me to celebrate and be excited if I were in that position, and that's good, because you want to be confident, not overconfident, but you want to have confidence. You want to have evidence that your system, your flow, your workflow, your routine works, and celebrating it is really good, in my opinion. But you don't want to be too confident, too excited, so that you're going to be deviating from the plan in terms of risk, in terms of frequency, in terms of the flow, your routine. Everything has to say to stay the same as you have backtested, as same as you have seen the profits that you're now celebrating.
That's right. It's hard to find that balance, right? Especially if it's your first time passing. I know first time I passed a funding challenge, I definitely turned around and blew it because I got too excited. So although Victor's advice maybe isn't what we want to hear when it happens, it's like take your day to celebrate, take your week to celebrate if you need, and then calm down, let the time, let yourself settle in, and then be ready to really stick to the process.
Yes, indeed. I'm trying to put on some.
Look here, Akash already has a perfect mindset. I will celebrate after my 5th payout. I love that. That's excellent. That's way more wisdom.
Good. That's conservative. I like that. I like to be conservative, because it's safer. It's nice to do things that excite us, but keeping it low, low profile on the excitement part is a good thing. It's not a sign of lacking confidence. Whoa, what was that? Did you guys see that?
No.
Look at that. Look at that candle. Right into the, are you guys watching this? Yes, you are. Look at that candle. What's happening? Is Trump speaking? Is that a tweet from Trump? Right? It reacted. This looks like it's going to break and go all the way the other way. That is a huge candle. I'm gonna check if we have some news on perhaps on our side, on the background. Let's see if there's anything. What is happening on Market is very volatile. Look at that 1 minute candle. It's even bigger than CPI's candle. And there isn't anything scheduled. So I wonder what it was. I have no idea still. And this looks so strong. It looks like that's not going to hold. This is gold being gold. Right?
Well, we're seeing a big move lower on the S&P as well. So on the indices, S&P is back below that previous day high. NASDAQ never made it above. And so I don't think it's as pronounced as what we're seeing in gold, but it is definitely, took a while for the volatility to kick in maybe, but definitely seeing some volatility throughout the indices as well.
This is certainly an increase in the volatility, for sure, for certain. All right, so let's check maybe euro dollar to see what's that. How is that pair changing? We have the initial move on the order block, but it closed above, so we only have the entry right here. This momentum, this looks like it's going to break through and continue higher. That's the momentum is very, very high, and there is, right, don't get too excited, right? It did get to the area, but let the price action speak, right? If it is going to reverse from there, it will show us. Don't get into before the actual signal. Actually, this big candle already tells us enough. This looks like it's going to move and continue to the upside. But let the market tell us, let price action tells us what it wants, what it will do, and not take decisions beforehand. On EU, let's see on the daily time frame, how are we currently in respect to that? I'm gonna take out this little arrow. Looks a little in the. Okay, so we're getting back into that daily order block. Let's see, do we have we don't have any structure to trade from. This is not part of a quasi, not part of a fresh order block. So I have no, from this side, this daily order block, I don't have anything. I only have this area to trade from. And it did not get that low as I would be, as I would have wanted to get in. So that means that I wouldn't have triggered me. That's why you see these alerts right here to start alerting me of a possible reaction, a possible trade or setup in here. Did not happen. All right, that's fine. Let's go back to gold. Gold is going everywhere and not nowhere.
That's so true.
Right? On the 1 minute, we did see the reaction of that order block. Entry order block on the 1 minute. It's only a 1 minute order block, right? So don't get your hopes too high. But the reaction, the second reaction, one from the area and one at the entry order block, at least on the 1 minute, it's not telling me. This looks bullish to me. Look at that big bullish candle that hasn't been negated. And if anything, I'm expecting price to just retrace. This looks like this is what it wants to do. It's difficult to trade this because it gets into your area, but it gets it in a way that is not going to signal short because of this big candle. But we will wait and patiently, and if it doesn't do anything, then we won't do anything. Remember, we're not in the business of predicting price. We're only looking to catch price as it is moving in a direction and telling us it is doing so. That's when we want to be getting in, not before it shows us its hand or at least a side of its cards, right? Do you play poker, by the way, Deanna?
I don't, and I was just telling my son. I think I would really like to learn. I mean, I know generally the rules, but I don't. Well, I don't even know if that's fair to say. No, I don't play, and I don't really know how to play. But I think that could be. I've heard it can be pretty beneficial for trading, just because you can. It's very similar on bet size and at least like the logic behind it. So yeah, that would be something that would be fun to try. Do you play?
Well, for those poker player out there, I'm all in. That's one you say when you're betting
Oh,
all.
there you
When
go.
when you're betting all your pot on your hand. Just kidding, I'm not all in. Obviously, that's not sound risk management.
You're
But
bluffing. You're just bluffing.
I'm bluffing. Yeah. Yeah, I do play poker. I like playing poker a lot.
Oh, okay.
Yes, and I enjoy it a lot as well. That's why I do it. But usually I play poker when I'm on vacation. At the same tropical island, I almost played golf. That's where, on those typical holidays, I play poker as well in tournaments. Not big tournaments, but just regular tournaments at the the places we go. Right, I love it.
Fun.
Yeah, poker is it's very similar to trading in many respects because it, you know trading, it's a serious thing, right? I mean, I earn my living doing this, so it's quite serious. But there is a game in it, right? There you can. I'm not talking about doing things irresponsible, but finding an edge, pushing your edge, the whole process to work, and trying to be better every time, being competitive, and all of that. You have all of that as well in poker, and it's it is a game, but you can take it very seriously and be really good at it. And the fun thing is that if you have an edge, you can have an edge in poker, obviously, right? The edge being you're better on average than anyone
I think we're
else
kind of
on the
losing
table.
your microphone.
Really? Okay, is it better now?
Is it just me or did your yeah, I'm not sure if it was that's the first time that's happened. So I don't know. Let us know in the chat. Maybe it was just on my end, but it cut out for a little bit there.
Okay, that's quite possible. I'm going to change a couple of things here, so minimizing the chance of that happening again. Let's see what I can do in the background. But you can hear me clearly right now. Is that correct? Okay, so I assume I am clearly. Here we are. Gold is pushing down again. Is it okay?
Yep, I can hear you just fine now.
Okay. I was saying the same way you have edge in the market as a trader, and you have to, you just play your odds, take the setups. You don't know if you're gonna win this trade or the next one, but if you keep playing the edge you have in the market of your system, in the end you're gonna be winning, right? It's very similar in poker as well. If you are the better player on the table, right? You just play, the hands, and you bet bigger when you have a better hand, and you're able to read others as well. If you're good at it, you have an edge above on the rest of the table, and if you play often enough, you will end up beating them all. And that's very similar. It's not completely identical, because you're not going to beat everyone in the market on the Forex market or trading in general, but it's the same idea. The only thing is, it's not just one table, it's a whole market, a much bigger market, obviously. But we see gold coming back.
Right.
I'm switching very quickly from topic, I know, but we see gold after this initial peak into that bearish order block. We see gold pushing quite nicely in bearish from here, and imagine being part of this trade, and you see, your higher the hourlies is looking short, and you have structures, right, just like I did here, but you see against you, you see these moves against you, right? These spikes. I mean, that's very hard to hold your position if you're not accustomed to it. You don't have clear ideas and clear rules as how to trade your edge. I mean, this can definitely take you out for sure.
Yeah, this has been tough price action today. Indices and gold. I think gold hasn't really. I mean, like you said, I don't know exactly how you said it, but it's done a whole lot and gone nowhere, or something along those lines. And that's exactly right. It's like it's been really, really tough to trade gold in this kind of messy price action. And kind of the same story with the S&P and the Nasdaq. It's doing a whole lot, but not doing a whole, or how did you say it? It's doing a whole lot, but not going a whole, I don't know. You know what I'm saying?
Yeah.
Brain is fried.
It's moving a lot, but going nowhere.
Going nowhere. Yeah, exactly. And, the indices are kind of an exaggerated version of that. They've been, very strongly moving higher and then strongly moving lower. And it's just been kind of a back and forth battle. So, it's a little bit tricky. So, if you're struggling today, hang in there. It's a tough one. At least from my perspective, this is tough price action.
It is tough. However you want to see it, it is. We have still 3 minutes in our stream. If you have any questions, let us know in the chat. That's what it's for. And while you're considering what question you might have, consider as well the like button, the subscribe button. They're there for a reason, and it's for you to click on them. We have in about 45 minutes and some extra minutes, 45 plus, we'll have one session today, which is in the Discord community. I will be hosting it, and we will. All of you are invited. We'll have 10 hub credits for one lucky winner, but the prize is obviously not any hub credits. The prize is being part of our community, learning from each other, interacting with like-minded people, traders, that is, people who are going through the same thing, that progression, that investment of time and effort to become better traders. And you can be part of that, interacting with us and learn from mistakes of others, be included, and become better while having a great time together. So join us at the Discord community. If you don't know how to get in, it is through the hub account of your the 5ers account, and then in there you'll find the Discord. There's a little link there that will take you to the Discord community. Obviously, you need to buy an account first, and it doesn't matter which account you buy, as long as you have an account with us, you are granted access to a great community for you to enjoy.
That's awesome. All right. I don't see a whole lot of questions coming up that we're able to address so much before the end, as we only have a minute and a half left. So time to wrap it up, basically. And the market, like you said, doing a whole lot of nothing. So this isn't the worst time to kind of be done with it, right? And move on. So
yes,
the chart likely will look very different tomorrow. So everybody be safe, be careful. Gold in my chart is looking very like, I guess is the word I'm looking for. And quite frankly, same in the S&P and the Nasdaq. We're just not getting a whole lot of decisive action. So today could be a tough one.
Yes, I certainly see that as well. As we're saying our last words before our session today, what I see on gold is, for those gold traders out there, there is a reversal pattern. We do have reasons from the left and also from the hourlies for price to go lower. Momentum on the news, after this news, the CPI, and later on, even though we don't know what caused this, the momentum was very, if you're short, scarily, very powerful, bullish. But as long as the market is within this range, if it is making these huge spikes but not able to break, the longer that lasts, the bearish sign it is. And on the flip side, as long as the market is able to hold this area on the which is basically around 340 to 338, as long as it's holding that, it's a bullish sign, and we can expect price to eventually break and continue to higher prices. And if you can see a reversal from these impulsive spikes, imagine all the trap traders that bought into these spikes, meaning their stops are going to be where? Their stops are going to be right below here, right below these areas. That means that once we break with, some decisively below these areas, what will happen? You will see a cascade of selling pressure coming in, and we should then be pushing much, much lower. With that said, we passed by a minute and some, so I would like to thank everyone for your presence. Thank you for being here. We are very grateful for your attention. Deanna, any last words?
No, I just hope everybody has a great day, and I'll look forward to seeing you all next time.
As always,
thanks so much, Victor.
Thank you, Deanna, for helping us and helping our traders be informed. And see everyone tomorrow again. Bye-bye.